reform. And that always often seems an endless wait. And then suddenly, almost without adequate warning and quite unexpectedly, reform which seemed very difficult to deliver because consensus was extremely difficult to achieve is delivered. It's there on the plate. Everyone's celebrating. This is being called a second Deepavali, which is what the Prime Minister wanted as well. And people are wondering, how did we do it? Is it a crisis that prompts massive reform in a country like India? That's just when everybody rallies to try and deliver. It happened at the time of Dr. Manmohan Singh. It's happened now. Big bang reform. Does it only get delivered when there are massive headwinds staring at us? Ma'am, welcome. That's your mic. And can we have a round of applause before the Finance Minister answers the question? Thank you.
Well, this one was in the making for almost 1.5 years. You had an election in between, and then soon after Prime Minister took charge for the third time, he did call me once and asked me if I'm working on GST. I said yes, I've started, and that was much before the last GST Council meeting, which was held in Rajasthan. And once again, I suppose, when we were preparing the budget this time, when the major announcement about income tax happened, even then he sort of once reminded me, saying, are you doing something on GST? Yes, I assured him even then. Then it was around May when I thought I had a worthy pack of reform measures that I could go to the PM and sort of brief him about it, saying this is what I have got as a major proposal, and the way in which it can work is that the center can give it as a proposal to the council itself. So that's how it happened. So it wasn't as if the crisis was on us because of the tariff measures, but this has been some time in the works.
Ma'am, the last time you delivered something which was quite as emphatic and brought India closer to global benchmarks is when you dramatically reduced the corporate tax rates in the country. And at that time, it didn't quite pan out the way you would have imagined for factors completely beyond your control. There was COVID, industry investment didn't quite take off in the way that you'd calculated. How confident are you that this time round, the estimates or the hope that you have with the reduction in GST rates will actually get passed on to consumers and lead to a virtuous cycle of consumption which ultimately spurs the growth rate of the Indian economy, madam?
I'm very confident. And I say this because I have complete trust on our industry and on our traders. Because I think people know, because after all, industry or traders themselves are consumers as well. So when they know that across the board, rates have been brought down, and I've said this several times before, the guiding principles were for me looking at those which are daily consumption items for all Indian citizens, particularly for the middle class and the poor people, and then that which is aspirational items for the middle class, looking at farmers for their inputs, MSMEs because they are going to have to drive this Indian economy. Already they are about 40% in the engineering sector and so on. So we have looked at all these, I've mentioned 4, the 5th being those which are very critical for the Indian economy at large. So these 5 filters were the one with which I looked at rate rationalization. So I'm of the impression that 140 crore Indians will have one or the other thing touching them from 22nd September, where they will see that the government's taxation reduction has come through. Government meaning the GST councils. So I'm very confident, because if it touches 140 crore people and it is not one section here, one section there, the persons who have got to pass the tax forward to the consumer are all consumers themselves in the first place.
I'll turn this now into a town hall format. We've got many doyens of Indian industry. We've got lots of people across sectors here as well. And I'll start with Rajiv Memani, Chief of Ernst & Young in India, President this year of the CII, Confederation of Indian Industry. We'll get him to ask the first question. We've got many stars of Indian television and business journalism here. They'll be asking questions as well. Ma'am hasn't asked even once, what question will you ask me? And I have no idea what people are going to ask either. So do applaud the Finance Minister for that as well. Thank you, ma'am. Here, Rajiv ji.
Thank you very much, ma'am. Reduction in corporate tax rate, reduction in personal tax, modification of the new Income Tax Act, and this one probably the most transformational. So I do want, India today has got one of the most competitive tax regimes as compared to most countries which have similar economic activity. So on behalf of industry, first let me just thank you profusely for making this happen. I think this is really it really reposes the faith, as you rightly said, on industry, and also the trust that you have put in. And the beauty of this is, ma'am, at least the way I see it, is it's not just rate reduction, but the clarity with which you have brought two rates, the structural reforms that have been done, and the speed which it has come and the way you have rolled it out is
you
really
seem
fantastic.
quite surprised with the speed, Mr. Mani.
I think everyone is surprised, because this touches so many things. So I'm sure a lot of work would have done, because every one product rolls into the other product.
What else would you like to see happen with such speed?
No, so let me first finish. and ma'am, you've not. I have two questions before Rahul interrupts me or needles me. The first one is, you've not brought in the anti-profiteering clause, at least not till now. And you did mention that you have a lot of faith in industry. I would really want you to articulate, if you can, what you would want from industry. This is a great platform, and I think it'll be great to get your perspective on that. The second is, as compensation cess gradually phases out, did you want to time this around the fact that when compensation cess is also phasing out, so that at least the impact on states will be much lesser, because the amount of compensation cess that was being collected was not going to states. It was mainly center using that money to repay the loans. And to some extent, where the rates haven't moved back, that money will now be available for distribution to states as well. So I just wanted to ask you that question.
On the compensation, I want a bit of a clarity. Is it timed with the compensation? Yeah, somewhat. Are you timing it around the compensation cess? Yes and no. Yes, because June 30th, 2022, compensation collection for the purpose of compensating the states ended. It had to be extended because in 2020 and partly 21, we couldn't give the states the compensation because we couldn't collect enough revenue. We had to borrow, and in order to pay the borrowing back, we had to extend the collection. Now, at least in 2 GST council meetings earlier, we had already said that, first of all, extension was till 31st March 2026, by which time it was assessed that we would be able to repay the loan. Now, sometime 2 GST councils before Rajasthan itself, we had said GST collection for the sake of paying back loan would probably end even earlier than March 2026. Subsequent to Rajasthan, our assessment gave us the feeling that probably we'll end it this calendar year itself and not wait till 26. And therefore, if this calendar year we collect as much as we need to repay the loan, we had no business to collect it even one day after that. So we needed to get the clearance from the council that post repaying the cess, what do we do? Which means that is why you had a GOM looking at it, and also then the rate rationalization GOM was also working. To the limited purpose of decision on the compensation cess, the GOM on compensation cess decided, but what to do about the money which was collected in the name of cess? Would it be replowed? Would it be reapplied, all that was to become a part of the rate rationalization GOM. So that decision was put to the GOM looking at rate rationalization. So that is why it had to be time somewhere to keep in mind that by the time the GST compensation cess comes to an end, we should know what happens to those items on which the cess was being levied. Therefore, we had to keep it somewhere closer to this date.
Okay, we'll take more questions. I've got Dr. Naresh Trehan here, one of India's most iconic, well-known doctors. Doc, your question for the Finance Minister.
So first of all, Honorable Finance Minister, I can only echo a big thank for the public in accessing healthcare by your very bold move.
Thank you.
So the question basically is right now that we have benefited majorly from the GST on insurance premiums going, because that made it very expensive for people on top of what was already their cost. So affordability for insurance will definitely increase, and more people we are expecting to come in the insured net. Second, you have taken away the GST on life-saving drugs, and also generally on pharmaceuticals, there's been reduced from 12 to 18% to 5%. So this is a big help in the sense it will reduce our cost of acquisition, and then we should be able to pass it on to the patient and the families. The third thing is that it also helps us to create more hospitals and the employment that we do is about 5 to 6 persons or healthcare workers per bed that we create. We need 1.8 million more beds in the next 10 to 15 years for India. So it can essentially create jobs for 10 to 15 million people as we move forward. So all this will help us to move forward. What I can request for the future is in your GST reform 3.0 that we still don't get a set-off on the GST that we pay, unlike most other sectors. That has been a long-standing request to you that maybe you can look at it. You've already done enough, but maybe in a subsequent move, if that is, we can get the set-off, it'll help us to even keep the cost under control. As it is, the cost of healthcare delivery in India, comparable to the rest of the world, or even better in some cases, is 1/10 to 1/5 of what the world can offer. So we are in good shape as far as our delivery system is concerned. Whatever help comes your way should be passed on to the public so that more and more people can access us. Thank you very much for this whole thing.
No better guest to do this panel than Shri Sanjay Kumar Agarwal. And Mr. Agarwal, thank you so much for taking the time out and being with us here. Well, the question that comes to mind is, ye dil mange more, and what more can come in. But you would have heard the first panel out here, and obviously there is a lot of conversation, debate, arguments, and discussions around whether this is the best form of ushering in GST 2.0, or are there some chinks in the armor that can be resolved or conversed upon. What are your thoughts here? Because you would have received a lot of feedback from all parties concerned.
Yeah, let me begin with what was the philosophy behind this entire reform. In fact, GST has completed 8 years of its journey. GST as a tax system has stabilized, and the revenue growth from GST was quite robust. In fact, last year, total GST collection was to the tune of 22 lakh crore. So this is the right time to carry out this transformational next generation reforms. And in this exercise, whatever was being criticized about GST, that it has led to a lot of complexity, and there is uncertainty and instability in the mind of taxpayers because of the many disputes which were arising because of multiple rates, 5%, 8%, 5%, 12%, 18%, or 28%. So it was thought that simplification, yes, is required, And therefore, the thought was to bring one standard rate and one merit rate. Apart from that, lot of process reforms have been carried out in it. And it's a journey. In fact, on rate part, lot of rationalization has been done. Goods have been put either on 18% or on 5%, depending upon the merit of the goods. As far as processes are concerned, the two processes where every taxpayer is involved is first to come into the GST ecosystem, they have to take the registration. And on registration, we were receiving a lot of complaints about that delays in registration. So it was thought that in GST process, the registration process was tightened because of the entry of a lot of fake entities who were there to pass on fake ITC. So it was thought that entities which are not concerned with passing of ITC were issuing mostly B2C invoices. Why in their cases cannot be a simplified registration process? That was a thought to bring a very simplified GST registration scheme, and where on the basis of their opting for not passing on more than 2.5 lakh as per month as GST, ITC. So they are granted a simplified registration within 3 working days by the system automatically. Similarly, processes have been simplified for granting the refunds. But lot more is in pipeline on the processes front. On rates, I will not say, because rates, we need stability. That was one of the major asks of the industry. So, but on processes, yeah, lot more things are in pipeline on return filing so that the mismatches may not happen. And because if a mismatch happens, then naturally to resolve that mismatch, lot of work is to be done, which leads to compliance burden on taxpayers. So that is next in pipeline.
I would like to ask, sir, that you rightly mentioned about the revenue. This rate cut would have some impact on the revenue collection, at least for the near term. Is there any estimates here, and how confident are you to meeting the budget estimates?
Shrimi, on this, I would like to mention that a lot of estimates are coming. And as far we are concerned, our estimate is 48,000 crores. On the basis of consumption pattern in 2023-24, for which the complete data is available. But it is very difficult to estimate exit revenue implication because of the complexity which is involved when the rates are cut across the board. So it is difficult to say, but I would like to mention, whenever rate cut happens, it leads to more consumption. And if there is more consumption, because this, whether it is 48,000 or maybe some other figure, it remains in the hands of people. And when it is in the hands of people, they will spend it. That will lead to more consumption and further stimulus to GST collections. But one important thing is there. The benefit of these rate cuts should be passed on to the last ultimate consumer. Then only the money will come in his hand. That will lead to consumption growth. So it is very important that the benefits are passed on by the industry to the common man.
But how will you ensure that, because a lot of skepticism around that, whether the end consumer will get the rate cut benefit or not. Also, will there any plan of reviving the anti-profiteering to deal with these issues?
So starting with the anti-profiteering provisions in GST law, the provisions are there, and when the GST was introduced in 2017, rate cuts have happened in 2017, 18, 19. And we have found that not many complaints have been filed under anti-profiteering provisions of GST law. So, and the amount involved was also not very big. So that gives us confidence that this time also the benefits will be passed on to the ultimate consumer. But what measures the government is taking to ensure that it is getting passed on to the ultimate consumer, I would like to mention that we are doing the price monitoring. So pre-cut and post-cut. So we have already instructed our field formations to take the data, and so that we can analyze whether these cuts are being passed on to the ultimate consumer or not. In fact, you might have also seen that in the print media, full page advertisement have happened from the industry segments where the cuts have happened, and they have pledged to pass on these cuts benefit to the ultimate consumers. So that again gives us more confidence that these cuts will be passed on to the ultimate consumer, and that will lead to increase in domestic consumption and will lead to better revenue growth.
Sir, I'm supposing that by this you are saying that you are fairly confident that there will not be any mishaps around anti-profiteering, etc. because of this, so that's taken on board. The feedback that we got from some of the companies that we were talking to outside was that there is still some debate around the inventory and the treatment of inventory in this transition period. Maybe they want some more time, maybe some industry bodies might be saying we do not need time. Maybe when the GST was announced, it should have come into effect not from September 22nd, but from September 5th. Any thoughts on that?
Yes, I would like to say that it was the industry's demand, because when the Honorable Prime Minister made that announcement on 15th of August, and there was quite an expectation from everyone that there will be GST rate cuts. And after that, we started receiving representation from trade that this exercise may be completed quickly, because that was leading to people postponing their purchases. So it was the industry demand, and that therefore the GST Council meeting was preponed and a decision was taken by GST Council, made their recommendations so that this effect can take place in the minimum possible time. So it will now be from 22nd September. Now, regarding the issue which you have mentioned about the stocks which are in the supply chain. Yes. So in such cases, actually this is not the first time the rate cut has happened. In past also rate cuts have happened. And in the supply chain, at whatever rate GST has been paid, that entity in supply chain is entitled to take full ITC. And when they further supply it, then in that case, naturally there is some value addition by them. Those are the margins and certain value addition if it happens. Then in the monthly returns, they have to make the payment, GST payment. So they make the payment either by utilizing the ITC, or the balance portion is paid by them in cash in their monthly returns. Now what will happen that if ITC availability is more, they may make the payment from ITC. So the cash payment liability will get reduced to that extent during the transition period. But I don't see any kind of problem, because people keep on talking about that their credit notes will have to be issued, but I don't think that will be a case, because this benefit will get passed on.
Mm-hmm. And just a follow-up question on that, as we all know that rate cut is across the auto sector, in the small category, in the luxury segment. But one issue is concerning it, especially for the auto dealers, is about accumulation of compensation cess, because that will go lapse after September 22nd. So is there a mechanism in work? Are you considering that issue? How they are going to recover that, unsold credit on the compensation cess, sir? Any mechanism there?
Yeah, you have raised a very pertinent issue. That concern is being flagged, and we keep on receiving representation regarding that. Let me say that cess is imposed for a particular purpose. Cess can be for the purpose of, say, health, cess can be for the purpose of agriculture, cess can be for the purpose of education. Compensation cess, again, is a cess. And it was imposed for a particular purpose, that was compensating the state in the first 5 years to ensure there is a certain percentage growth in their revenues on year-to-year basis. And that 5-year period was over in June 2022. After that, the compensation cess which is being collected is for the purpose of repayment of loan and interest thereon, which was taken during the period of COVID, because there was dip in revenue collections during that period. So I think in 2020-21, a loan of 1.1 lakh crore was taken, and in subsequent year, 2021-22, a loan of 1.59 lakh crore was taken. For repayment of that loan, this compensation cess was taken and being collected. So whenever cess is discontinued, in past also, cesses have been discontinued. So what happened in those cases? Actually, in those cases also, what was lying in the books could not be utilized, because the levy itself has gone. Same thing has happened in case of automobiles also, or maybe wherever cess has been discontinued. It is not only automobiles, it is in case of aerated water, it is in the case of coal also.
Right.
So once the levy has gone, whatever credit is lying, it will remain lying in their books.
So most of the people, right, last question or last couple of questions, most of the people that we've spoken to in the last 4 days have, like I said, I started off the conversation saying, "Ye dil mange more," everybody's saying, what's next? Now, I read about your comments that India will move to a single structure when income parity comes across. Now, that is maybe light years away. So between then and now, what else can be expected?
Yeah.
Not on the process, please, on the rates.
Presently, in this restructuring exercise, now it is 2-rate structure, 18 and 5. 5 has been kept a merit rate because our socio-economic conditions are such that for common men use items, we have to keep a lower rate. Once there is no need to keep a lower rate and only a standard rate is required, at that time, definitely another reform can be carried out by doing away with merit rate and having a standard rate. But I think that can happen, as I mentioned earlier also, that is there in some developed countries, not in all developed countries. So once we are in that position, that we can say for sure that everyone can afford goods equally, then we can have a single rate. In fact, single rate will lead to another benefit. Then there will be no inverted duty structure, because till the time we have to keep some goods at merit rate, we will have inverted duty structure in those sectors. So that is inevitable.
Speaking on the inverted duty structure, do you think these measures which we have taken under GST 2.0 is going to resolve fully with the sectors like textile, fertilizers?
As I mentioned that till the time we have to keep certain goods, maybe textiles, maybe certain other goods at merit rate of 5%, their inputs all cannot be brought, because inputs can be used across different industry segments. So the inputs have to be kept at 18%. And if you want to keep everything at one rate, as I mentioned, that inverted duty structure will go for all commodities once we have single rate. But that can be only in future, depending upon the socio-economic conditions in the country.
Last question, sir. I had to ask this about the additional levy, lot of chatter around it, over and above the 40% special rate on tobacco. Is there any talks on that? Is there any measure under consideration?
The central government stand is that on the sin goods, tobacco products, the tax incidence will not be lowered. So the room which was available under GST law was that 40% can be the maximum rate. So up to 40% GST Council has recommended on tobacco products, sin goods. Beyond that, yes, there will be a levy under the constitutional provisions, so that tax incidence does not come down.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio.
Hello and welcome. You're watching India Market Close. It's a packed show. I'm Harsh Saida. With me is Hiral Dadia as well as Mahima Vachajani. So we're down around. We're up around 1/3%, but we're down around 50 odd points from the 25k mark. That's really the threshold that we've been tracking all through the day. So we're off the day's highs for sure. We clocked a high of 25,036 odd in trade today, and now we're maybe just about 90 odd points lower from that point. Now let's talk about the heat map, and that'll also give us a flavor of what's working today. BEL, of course, within the defense pack, that one is doing well. And then it's a host of IT names. Look at Wipro, HCL, Tech Mahindra, TCS. A bit of a catch-up trade to what played out on an Infosys yesterday is playing out within the other names within that IT space. HDFC Life is the other one, which is strong and steady, 2% higher. Life insurance data also came out, and we'll talk a bit about that on how those numbers actually were as the show progresses. But we've got a couple of banking names also which are doing okay in trade, and Axis is out there and SBI is out there. So those names also doing well. Some of the auto names are on the bottom of the screen for a change. You're seeing a bit of a mix change happening there, and on the sectoral heat map as well, you'll likely see the very similar kind of a trend play out. IT, defense right up there on top. PSU banks as an index is up 2% in trade, so that's the other one which is playing out fairly well. The Nifty bank is up 0.5% plus, so that's supporting the Nifty index. Not surprised, we spoke about a couple of banks doing well, and Nifty auto is down 1.5%, so some profit booking coming in there. But the advance decline strongly in favor of the advances, Hiral. And while we've seen a bit of a taper down, if I can call it, of the strength with regard to the breadth, but you still have a decent number of advances to decline. So broader markets, okay.
Absolutely. I mean, if you see the trend as well, that mouth is absolutely narrowing right now as we speak, if you have to look at the advance decline ratio. But in terms of broader markets, they're staying pretty steady. That outperformance as compared to the benchmarks has continued. 0.8% higher. If you have to look at the mid cap 150, small cap 250, let's pull up that one on the screens as well, because a lot of stock specific action that has receded slightly. 0.6% higher, almost inching towards the day's lowest levels in terms of small cap 250 as well. But what's interesting is, Mahima, the range is absolutely narrow, You're not seeing much scope of deviations that are happening right now. If you have to talk about Nifty 50 and if you have to talk about Bank Nifty as well. What is interesting is you started with a sea of green across sectors in the morning. Currently, auto, it's actually come down. If you pull up Nifty auto on the screens, if you pull up Nifty consumption or even FMCG, that will tell you from a positive start, you've actually gone into the negative trading at the day's lowest levels. And these are the sectors which have actually run up a lot on the back of GST 2.0, since the 15th of August, and now that profit booking has started to come in both these sectors. But a lot of individual stocks that are actually making the limelight today.
Absolutely, and it's very counter-specific also, right? There are some textile names which have, which are actually flying in trade today. Some shrimp exporters which are also flying in trade. To name a few, in the textile space, you have Indocount, Welspun Living, Garware High Tech. You have something like a Vardhaman Textiles, all seeing gains of about 6 to that 15% mark, and this is because of two reasons. One, because the trade negotiations between India and US are back on the positive front, and secondly, there is an inverted duty structure with the textile sector was kind of afraid of in the GST one, has been now announced. The inverted duty structure will help these textile companies because for them input tax was higher than the output tax. The second one is your shrimp counters that are doing very well, and this is on the back of the negotiations going on with the EU for the free trade agreement, and that could probably boost 20% growth in these exporters. And one of the reasons as to why these counters are buzzing, something like Avanti Feeds, Coastal Corp, you have your Apex Frozen Foods with some counters that are doing very well in trade today. So that's with regards to some counters that are buzzing in trade. Something like a car trade is down though around 11%, and JM Financial, which in fact initiated a sell rating, is also seeing some kind of down ticket trade. But with that, let's also welcome in our guest for the day, Kush Bora of kushbora.com and Avinash Gorakhshagar of Profit Mart Securities joining us now. Welcome to both of you gentlemen, and a very good afternoon to you. Kush, your view on the markets, we're hovering around that 25,000 levels. What do you think? From here on, what is the kind of trajectory that you're seeing?
Sure. First up, hi Mahima. Very good afternoon to you and to all the viewers. I think you can read this in two ways. Let's start with the positives, right? If we close in the green, and this will be the sixth consecutive day of a green closing for the Nifty, which is of course a positive. 50-day moving average resistance that's been taken out. RSI is starting to point north. And if you see the support levels, they've also shifted higher from 24,400 to 600 to now 24,800. So I think these are a few positives. Amongst the areas that are a bit of a concern even now, and largely just one, is the 25,000 resistance that is acting up. We did see the Nifty sustain above that for some time, but that's been given into. Now, if you're looking at the range play, we've been discussing 24,400 and 25,000 range for a while now. Upper end of the range, you wouldn't want to create a long position unless it's taken out, with some gusto. So you might want to just hold up on that positional long trade, see if you're able to close above 25,000. I take heart from, one very important fact is that FIIs are starting to cover some shorts, nothing significant, nothing too aggressive. But even that mild short covering has been enough to, spark the sentiment on the positive side all over again. So yes, if that trend continues, I think you could see a big rally, but 25,000 still remains that mark beyond which we need a strong closing.
Hiral, this side. So do you think the way the market has turned today in the second half of the session, is it profit booking, and the style the traders are picking up right now is sell on rise also? Because at higher levels, the moment you hit that resistance mark, that selling does come in. Is that the strategy which is continuing?
Hi, Hiral. Great question. What's happened is that 24,800 for the previous week's expiry was turning out to be a pivotal level from where the traders were positioning their call and put positions. If you see now that is starting to happen for 25,000, I take that as a positive, because that would mean that we would hover around this level, give or take 150 points or maybe even 200 points, given the premiums right now, where the index could hover. So yes, definitely profit booking from higher levels is evident. As I said, this could be the sixth consecutive day when we close in the green. So some profit booking around the resistance level, par for the course. But even if we hover around 25,000, I think that's a positive. Also, let's not forget, after a while, you're seeing this outperformance on the bank Nifty, which is also confirming the fact that, the short covering that I was talking about by FIIs is underway. They've been heavily short in the market. Bank Nifty has bore the biggest brunt. And now seeing some outperformance suggests that, that short covering is perhaps to be seen. At least what happened is that they've stopped, any further shorts, which is also a positive sign.
Okay. Kush, what about your picks for the day? What would you go ahead and buy?
Yeah, but given the mild enthusiasm that you can sense in my voice, I'm going with two longs today. So one of them is KEI Industries. We've discussed the stock in the past, has done well, continuing to consolidate for the last two to three sessions. But on the whole, the trajectory is north and holding ground. 41.10, 4200 are your targets on the upside. For 39.30 is where you keep that stop loss. The other one is Samman Capital. Here too, we had a call on Monday for the first target of 141, second target of 144. Those targets still intact. Monday, it hit the first target and retraced precisely from 141. Right now, the consolidation, or you can call it profit booking, is on fairly thin volumes, hence the confidence that still remains. So keep 134.50 as your stop loss, and you can still gun for targets of 141, 144.
With regards to Samman Capital, and you're talking about KI Industries. In fact, KI Industries across, you've been seeing some buying interest that's coming in today's session. But Avinash, let me come to you. Technical picks coming in from Kush, both these names, do fundamentals hold at your end as well for a KEI and a Samman Capital?
No, I think, Hiral, KEI Capital definitely looks interesting, industry, sorry. Our sense is that, the cable business is going to grow quite rapidly considering the kind of, power generating capacity which the country is putting. And most importantly, KEI is a very well-established player, both from the private sector as well as, from the government infra projects. They have a large B2C business, so, that adds to their margins. So I would not be surprised that this is going to be another good year for them. Order book is very strong. Execution has been very, solid for them. And I think looking at the kind of, latent demand which is expected in the second half of this financial year, I think cable as a sector should do well. And we are structurally positive on KA. But yes, I think we would prefer to buy it at slightly lower levels, considering the fact that it's not a cheap stock. But clearly, I think if one were to look at the next 12 to 15 months, I think we could see very strong numbers for FY26 going forward.
Okay, all right. Stock of the day, that time of the show where we give you that. And surely today's stock of the day is Oracle Financial. Stock picked up 10%, strongest gain we've seen since June of 2024 on this one, whatever, 9.5%. Trading volumes are at 18 times 20-day average. So you're seeing very, very strong volumes on a day like this. Why the buzz? Well, you have the parent, which is Oracle Corp, which has given very solid commentary at the end of their quarterly earnings. They've reported major increases in bookings, and especially with regard to the cloud infra business. They are very positive with regard to this one. Let's talk about some of the deals that have come through. Oracle Corp has signed multi-billion-dollar deals, 4 of them with 3 clients. Breaking this down further, the new commitments largely include one with OpenAI. 4.5 gigawatt is the size of that. Then you have deals with TikTok and NVIDIA. All of these are powered by Oracle's new bookings. And the new bookings have actually gone up to $455 billion at close at the end of this quarter. Cloud infra is in focus on the back of that. The top line from cloud infra alone likely to go up by 77% this year and 8x over the next 4 to 5 years. That's the outlook and the guidance. This will take the cloud infra revenue alone for an Oracle Corp to $144 billion in the next 4 to 5 years. So very strong tailwind with regard to this line of business. More deals are expected to be signed in coming months as well, is what they said. All of this, of course, benefits Oracle Corp in a big fashion, and the stock surged. But it also obviously benefits the Indian subsidiary, which is Oracle Financial Services. Just one analyst tracking this one with a 14% upside. That one is Daulat Capital. So something to keep in mind. Stock obviously 9.3% higher. Avinash, is this one something that probably is something that really stands out? And not just Oracle, overall within IT, are you starting to see good traction? Because we're seeing that the IT index has run up nearly 5% in the last couple of trading sessions.
No, I think, Harsh, talking about Oracle, first of all, it's a product software company. So possibly, the premium kind of valuation which it gets is largely because of the product and the nature of business it does. It's not a pure services company. And most importantly, it's got a very large list of marquee customers. So, cash flows are very strong. And, the most important thing is that almost 90% plus stock is held by the MNC. So it's a very, strong, delisting candidate. I think it's been a very long story. Markets are expecting that someday it will happen. But clearly, from the business standpoint of view, fundamentals are pretty solid. And I think, the news flow which came from the MNC parent obviously will have a rub off on the Indian subsidiary. And I think this is a stock where I think investors need to take at least a couple of years, call and I think sit on it, because this is not a trading stock. I think it's an investment grade stock, but you need to stay invested for a long time. As far as the other IT companies after Infosys buyback, I think there's been a kind of a perception change that these companies are looking forward with some sort of optimism. I would say that post September, I think what commentary you get from the managements on the business, on the operating metrics will also be important to watch out, because see, just announcing a buyback has got sentimental value, but I think on the operating metrics, if certain kind of degree of growth quotient comes in, then I think most of these stocks are available at rough valuations. I think they have corrected from their peak levels. So I think something like a TCS or maybe, from the mid caps, something like KPIT, Persistent could definitely be good bets, if one were to take the next 12 to 15 months. I think possibly November or December, I think we would see very good clarity from the US, customers. And most importantly, if there is a change in the import policy, I think Donald Trump has been giving very positive tweets, to our prime minister. So hopefully if sentiment changes, then the re-rating could happen significantly. So we are structurally positive on the mid-cap names like KPIT, Persistent. And of course, even TCS can be accumulated for a slightly medium-term holding.
That's a fundamental view with regards to the IT pack. But Kush, your view quickly on the charts. Any of these IT counters that you would probably trade in right now, considering, as Harsh mentioned, in the couple of trading sessions, last trading sessions, it's already up 5%.
So two of them, KPIT, I think now is a consensus in between Avinash and myself. We've had a good move up until today as well. The last 6 odd sessions have seen good volume accumulation, heading towards the 200-day moving average resistance, but that is also at 1315. So if you want to consider a trade, you could still do so. 1260, keep a stop loss around that level. And as far as the other names, but I think Infosys, despite the kind of move that it's made yesterday and today, I think still has some steam left on the upside. So for targets of 1565, 1600 with a stop loss around the 1500 mark, would still show some upside, in days to come.
The IT majors. In fact, we were just having a laugh whether we should be calling this sector or the stocks that are buzzing in trade the catch of the day or not, because it seems to be seafood stocks that are on fire today. In fact, they've been caught by investors is what I would say. Varsha is with us to tell us what's working for them. Varsha, what are you picking up?
Yeah, thank you for that. Yes, so yes, you were right. Actually, whole sector is buzzing. A lot of seafood stocks are buzzing. This is on the back of positive development coming from EU, wherein EU has, approved 102 Indian fishery establishments for export. Now, this is positive because positive signal for 13th FTA agreement between FTA negotiations, I would say, between India and EU, and this will boost exports when it comes to Indian shrimp industry or seafood stocks, I would say. Why? Because US is because one of the thing is the marine exports, if you see, have been hit by imposition of 50% tariff by US to Indian exports. And why this is important? Because US is the biggest market when it comes to seafoods. This is followed by EU, then China, Japan, and Vietnam. Talking about the contribution from EU when it comes to two companies, that is Avanti Feeds, which the EU contribution stands at around 17%, but this is through their subsidiary, which is Avanti Frozen, which the EU contributes almost 17% to the overall revenue for this company. While if you see Apex Frozen, the EU contribution stands at around 39%. So overall, because of this positive development which is coming from EU, will boost the export for Indian seafood companies, and this is why the whole sector is buzzing as of today.
Varsha, for that. In fact, Avinash, a quick one. Would you be a buyer of shrimp companies or seafood companies with the gains of 15 to 20% that have already come in right now? Or would you advise investors to sell and book profits taking the way news flow has been panning out around this space?
No, I think, Hiral, it's better to stay away for some time because see, today some news flow came that the European markets could, occupy some market space for Indian exporters because US market has been the largest market for marine, shrimp kind of players. See, most of the companies are well positioned. Today, we have seen a good kind of traction in stocks like Avanti, all the other companies. But typically, I think, for orders to come in, the business traction to get reflected in numbers, it could take a couple of quarters. It's not so easy to assume that immediately the news flow is going to get converted into business. So I would say that, fresh buying definitely should be avoided. I think you need little more clarity from the managements. I think the commentary from the management post the September call results, I think would be very important because a large part of their business is completely US denominated. And I think at least the second and third quarter is going to be quite challenging if the import duty tariffs don't come down. So I think it is better to just stay put. I think no need to go and immediately buy these stocks because 15-20% is ideally, for those who are trading in these stocks. I think we have seen that happening in the semiconductor companies about a week back. Now it's happening for the shrimp company. So I think markets just relish news flow and obviously they play on the momentum. But from an investment standpoint, I think it's better to wait.
Okay, all right. So that's the holistic view on all of these counters. But it's that time of the show where my colleague Somit Sarkar joins us with all the chatter around the dealing room and what he is hearing. Somit, what are you hearing today?
Well, multiple stocks in focus. Firstly, it's VIP Industries and Sapphire. There are buy flows on institutional desk is what dealers are indicating. So keep an eye out for both the counters in trade. In fact, VIP was down in trade, but right now it's up around 2%. So keep an eye out for VIP Industries specifically. When it comes to GAIL, multiple dealing rooms are suggesting or recommending their clients buy call on this stock based on technical setup. Dealers are indicating that the technical setup for GAIL is quite strong. And on the fundamental side, there's a trigger that would be the pipeline tariff hike that is expected to come out anytime soon. For Newland Labs, there are buy flows on PMS desk is what dealers are indicating. For Axis Bank, buy flows on FY desk. The stock has been consolidating for the last 1 month, and dealers believe that the worst seems to be priced in for Axis Bank at current valuation. So keep an eye out for Axis Bank. And lastly, when it comes to MCX, dealers are indicating that there are buy flows on large HNI desk on anticipation of strong volume numbers to come in from MCX. So keep an eye out for MCX as well.
Fascinatingly, Hiral, Axis Bank and Somit, Axis Bank is one of those counters which is currently on the buy list of most analysts, and it has the highest upside among all within the Nifty banks. 28% upside is what analysts.
That could actually be a link for tomorrow. On why analysts are bullish on Axis Bank.
Thanks, Somit, but we did that yesterday, so
okay.
So a day late,
but that's okay. But one thing I want to check with you, Somit, is you mentioned about MCX buy flows coming in there. If you pull up a BSE on the screens as well today, we did see an up move of almost 3.5%. Up downside. Sorry, it opened in the positive, but a 3 to 4% downside coming in there. Anything that you're picking up in terms of BSE as well? Why this pressure that is being created?
So it's not only BSE. In fact, Angel One is also down in trade.
So all your market today, capital market
capital
stocks.
market, prime equity capital market stocks have been down in trade, and the buzz on the street is that there could be some regulation that could come in related to weekly expiry, and that's the reason we are seeing this pressure when it comes to BSE and Angel One.
Okay, and that's a Motilal Oswal, which is at the day's highs with 4.5%.
No, but elaborating on that. So what could this be around in terms of what can?
So there have been multiple news reports which suggest that SEBI might look to terminate or completely shut down weekly expiry, and if that happens, then nearly 70% of BSE's EPS could just wipe off.
And that's interesting. In fact, Kush, anything that charts indicate right now of what you should be doing with a BSE which is under pressure, the other capital market stocks which are under pressure versus a Motilal Oswal which is seeing some strong moves today.
So Hiral, I think this is a wait and watch. The stock actually has had a couple of attempts at revival, but they do get fizzled out and sold into. So I wouldn't be surprised that if this news comes about, then you could see further gashes on BSE. But up until the 2100, 200 DMS support and the recent swing low is maintained, I think the stock would consolidate for some time. But nevertheless, given the kind of selling pressure that you're seeing, I think BSE should perhaps be on a wait and watch list. MCX, incidentally, I've had on my shorting list for some time. Yesterday too, we gave out a shorting call. Today the stock was up, but it's given way quite sharply. So I think there is some pressure ongoing on MCX. It's still a ripe short candidate.
Okay, all right. We have the Amphi data that is flashing on your screen right now for the month of August, and we have Alex joining us to give us a perspective and details as to how fund flows have been in this month. Alex?
Yeah, absolutely. Well, let me take you through the headline number first, and that's what you see on your screen, that 52,442 crore number. That is a net inflow into mutual funds. Now, this is across categories, of course. Actively managed equity, including fixed income, hybrid, and everything from ETFs to gold ETFs, all of that included. But let's drill down into a little bit of more detail, because if you look at it month on month, there's a pretty sharp deceleration in the net inflows. Remember, the previous month you had inflows of about 1.8 lakh crore rupees. But don't be alarmed, because this is something that happens at the start of a quarter, and July saw tremendous inflows into fixed income mutual fund schemes, and large part of that goes into liquid funds and overnight funds. In August, that is in the month gone by, you actually have outflows of about 8,000 crore rupees from fixed income mutual fund schemes as a whole. This is something that normally happens in the middle of a quarter, and towards the end of a quarter, you will see more outflows from these schemes. But the more interesting talking point will be the actively managed equity category. And these are everything from your flexi cap funds to your multi-cap funds, as well as your thematic and sectoral funds, which a lot of people tend to love now. And you've seen net inflows of about 33,430 crore rupees in the month gone by, in the month of August. And that compares with inflows of about 42,700 crore rupees in the previous month, in the month of July. But interestingly, bear in mind that the month of July saw about 8,000 odd crore rupees, and I'm just checking that number, close to 9,000 crore rupees, in fact, on account of new fund offers. And there weren't too many in the month gone by, that is in the month of July. In fact, you had inflows only of about 2,056 crore rupees through 3 schemes, 2 of which were sectoral schemes, and that is not very much. So therefore, if you remove the impact of the new fund offers, then you have still had inflows of about 30,000 crore or thereabouts, and that compares with about 32,000 crore rupees or 31,000 crore rupees in the previous month if you remove new fund offers. Drilling a little deeper into some of these schemes and where the inflows have come through from, and you're actually seeing pretty substantial inflows into your flexi cap funds, where you've seen inflows of close to 7,700 crore rupees. And that's pretty much stable. Sectoral and thematic have gotten inflows of about 3,900 crore rupees, but do remember that you had 2 new fund offers in this category as well. So come to think of it, it's likely that people are taking some money off the table from some of these sectoral thematic funds. And then you have inflows of about 5,000 crore rupees coming through in small cap funds, which is actually pretty healthy. Mid cap funds have gotten inflows of about 5,300 crore rupees. Put those two together, and once again, second month in a row, you're getting inflows of about 10,000 crore or more into just these 2 categories of mutual fund schemes, broader market funds, once again finding interest. You have in the multi-cap category about 3,200 crore rupees of inflows, which is also pretty substantial. And interestingly, large cap actively managed mutual funds, which have not found favor broadly over the last 5 years, have gotten inflows of about 2,800 crore rupees, probably because active fund managers have actually found it not easier, but they've actually managed to beat the benchmark over the course of the last 1.5 years or so, and that performance seems to be having a bearing. In the hybrid category, you have inflows of about 15,300 crore rupees. Once again, decent. A large part of that coming through in arbitrage funds, which once again, let me establish, people are using these as alternatives to short-term fixed income funds, and so don't read too much into that. Multi-asset funds are becoming a fan favorite or investor favorite. 6,700 crore rupees or thereabouts coming through there. One last point that I will make, or rather 2, in the ETF category, gold ETFs have seen inflows of about 2,200 crore rupees. And we've seen a very sharp surge in the prices of gold over the course of the last couple of weeks. So a lot of those investors have actually benefited from that. And the other ETF category, which includes quite a few schemes, including equity and also silver, by the way, has seen inflows of about 7,244 crore rupees. So quite substantial in the way of flows into passive schemes as well. We're joined by Suranjana Boratkar, who is the head of distribution and strategic alliances at Mirae Asset Investment. Thank you so much, Suranjana, for taking the time. What is your initial reading on the active equity inflows? Because if I remove the NFOs, the new fund offers, it seems pretty decent.
Yeah, hi. Good afternoon. I think what it looks like is that there is a marginal downside in the equity flows, not a very large number. I think from 42,000 it comes down to 33,000 within the I think last month the big upside was also because of the sectoral category. Within that there was I think almost 9,000 crores of inflows came in sectoral, and within that about 7,000 was in NFOs only. So I think that's one part which has calmed down a little. I think hybrids is the other part. If you see from a 20,000, it has come down to about 15,000, which is where I think one of the categories, probably the arbitrage, which is where you could see a very high inflow which was happening earlier. That's probably calmed down to a certain extent. But I think we'll watch out for the SIP numbers as well, and if that remains intact, then everything else looks okay.
Talk to me about the inflows that we've seen in the mid-cap and the small-cap actively managed category, because, Suranjana, 2 months in a row, you're seeing 10,000 crore plus inflows into these two categories. And what is the feeling that you have from the pulse that you have on the ground? What are investors doing in your experience? Are they heading now more towards the broader market funds?
So I think what is happening is that in between, if you saw that, the mid cap and the small cap categories had become quite heated, which is where the valuations were not very comfortable in terms of incremental inflow. So a lot of money was moving towards the large cap and the flexi cap category. But I think investors and distributor alike are of the view that if you have a longer term horizon, the underlying market, especially in the mid and small cap segment, has been, it's been expanding, and the number of opportunities have been increasing. So, which is where I think if you look at the net inflows in both categories have come down a little. But if you look at the kind of commitment, if you have a time horizon which is 3 years and beyond, then people are willing to take a long-term outlook in both these categories as well. But I think flexi cap and multi cap, if you look at the ground reality, I think flexi cap and multi cap have become two darling categories where people are probably making commitments for the long term with the vision of taking allocation to all three segments put together.
Yeah, that's an interesting point that you make, because even in the previous month, in the month of July, you had inflows of about 7,650 crore rupees into flexi cap category, which is, as you would know, viewer, the open slate category for the fund manager to invest in. And it's more or less stayed stable at 7,679 crore rupees. And there aren't really any new fund offers. I'm just checking very quickly. In fact, apart from the sectoral and thematic schemes that were launched, there was just one mid-cap fund that was launched in the month gone by, and that got inflows of about 634 crore rupees. So it's an interesting point that you make. What is the feeling on gold ETFs, Suranjana? One would think that with the way that prices have moved up, there would be quite a bit of interest in buying in.
Yeah, I think gold is an interesting segment. So the more I interact with people, more I get to hear that there is a certain segment of people who have made money and are happy with the fact that they have taken exposure in gold. There is another segment who is also feeling this fear of missing out. So which is where I think incremental allocations in this segment also people are willing to make. If you look at the gold ETF numbers, I think this month there has been an upside that we see of about 7,200 crores, which is last month was around 1,200, I think, in terms of net flows. So I think there is a little bit of chasing also which is happening here, but a lot of investors who have stayed invested have also made money and are increasing their commitment towards the segment. But our advice is always that in terms of the allocation, it needs to be carefully allocated as per the risk appetite of the client, and diversification is the way to go.
Okay. All right. Thanks so much, Suranjana, for joining in and for giving us that perspective. All told, just to wrap things up, pretty solid set of numbers for the mutual fund industry. We're still awaiting the SIP number. We'll bring you that information as soon as we get it. Do stay tuned. We'll be back on the other side with live market action.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back. You're watching India Market Close here at NDTV Profit. Well, markets have taken a slight uptick from where we started. The Nifty 50 trading 0.4% higher. The Bank Nifty also trading around 0.6% higher. The Mid Cap 150 is almost a percent higher now, and the Small Cap 250 also doing well in trade today, but it's not as good as where the Mid Cap 150 is doing, up by about 0.7%. But on to our bull versus bear segment, we have car trade today, and the stock is seeing the kind of downtick that we've seen on the back of a JM Financial note. But Puneet joins us with all the details and of course the bull side and the bear side.
Well, thank you for that. So we've essentially seen a downgrade today actually on this one from JM Financial, and that led to a rout of almost 18% for car trade tech before a slight recovery, but still continues to be largely under pressure. That's largely the first bear point to start with. They've cited rich valuations of the company given the recent up move in the stock, and says that over 38 to 39 times for FY27 on the EBITDA multiple is rich, to say the least. On the other side, we have seen brokerages at Nomura largely being positive on Cartrade Tech. They mentioned that the recently acquired OLX initiatives to harness a significant potential of growth going forward will be one of the key triggers for the company for its re-rating further in terms of earnings, and that largely seems to be a differential between both these brokerages, but largely reacting on the recent downgrade today on JM Financial that came out today. When you look at the second bull and bear case, we've seen the GST rate cut will likely lead to a significant growth for all the automobile sector, and that does bode well for Cartrade, both on the classified business, which get higher revenue because of advertisements, as well as its OLX platform, because you do see used car segment also get a boost at a good time for the auto sector. But JM Financial has also highlighted this point that the demand boost in the automobile space does not mean a linear growth essentially for Cartrade across this vertical. So we might be penciling in a lot more and a lot faster essentially than it actually would. And that's the second bear point for Cartrade Tech. When you look at the third bull and bear case, we've largely seen that the classified businesses continue to show growth despite the slower industry for the auto sector, and largely seems to be that people, while delaying their purchases, still look at cars in terms of if they could get something better on classified platforms like bikewale.com, which is owned by Cartrade Tech. But one of the biggest advances in technology has been generative AI, and the use of AI tools like ChatGPT as well, amongst other tools, has essentially disrupted the Google search model, which Cartrade Tech gets a lot of benefit from. So that is an industry caveat that's still not boarded into risk for those numbers, and that'll be something to watch out for. Finally, in terms of valuations, 36 times, 38 times EV to EBITDA, FY27 is rich, none to the least. It's also a 45% premium to the company's valuation on a historical basis. So not a lot of room, at least in terms of valuation for Cartrade Tech. But brokerages as well as consensus estimates of EPS growth is 63% by FY27. So FY25 was 30 rupees. They are expecting this to go to 49 rupees per share, which roughly translates to 50 times price to earnings for Cartrade Tech. But valuations, a key focal point, and we're seeing that result on the share price today.
That's with regards to Cartrade. A good recovery as well, though, Puneet, from the day's lowest levels. Thank you for getting us the details. Avinash, how would you look at a Cartrade? I mean, a good run-up in the past is what we've seen, and now you're seeing that downgrade that's coming from a JM Financial. What would you advise investors to do?
No, I think, Hiral, with a price earning multiple of 50 times and EV to EBITDA of 38 times on FY27, I think the stock looks fairly, expensive. I think, when you buy these kind of stocks, the most important thing you need to monitor is that if there is any negative surprise, the downside in these stocks is also quite significant. And I think that is what exactly what has happened today. A downgrade has come in. I would say that, I think somebody who has already invested in the stock can continue to hold, but fresh buying doesn't give the kind of upside, the kind of valuations offer. So I think we could possibly look at, automobile manufacturers directly, something like an M&M or maybe Ashok Leyland, where the risk reward is much better. I think, in these fintech companies, as, your colleague mentioned, I think with AI coming in and new tools coming in, I think the business model is getting changed. And I think there are now going to be very big variables, which may change the business model of such companies. So I think it's better to avoid, as of now. I think you can hold on, but fresh buying avoidable.
Kush, your quick view on Cartrade with regards to where charts are concerned. Do you think that this kind of dip is something, that could be probably a buy on dips?
No, I'd wait on this one. The stock had already run up quite a bit. You were starting to see some negative divergences. Some profit booking was par for the course, not a cash as big as this though. While the stock has taken support near the 22-25 mark and rebounded, I think you should perhaps give it one more day, because the fall is on the back of fairly high volumes. So give it a day or two more. If the 2200 level is held, then you might perhaps, for a favorable risk reward ratio, consider the trade. For now, I would just put it on the wait and watch list.
Okay, so that's with regards to where Cartrade goes. Let's just quickly pull up a Sona BLW in trade right now and see what the counter is doing as we speak. And this is on the back of the commentary that is coming in right now. If you can just see what they are saying, Priya Kapoor has come out with a statement where she said that Sanjay and Karishma's children have already received a beneficial interest in assets which have been valued at over rupees 1900 crores through the trust. In fact, Priya Kapoor has been cooperating with the plaintiffs in facilitating and securing their beneficial interest as well. Apart from that, what she's indicated, what the statement indicates is that there is unimpeachable electronic evidence alongside the execution to the will, and the plaintiffs have refused to sign any non-disclosure agreements. In fact, the Delhi High Court has not given any interim protection to the plaintiffs and asked the response to be filed. The matter will be heard next on the 9th of October. If you talk about the background to this as well in terms of what came in yesterday, Karishma Kapoor's kids had moved the High Court for a share in Sanjay Kapoor's estate. In fact, the children had accused Priya of forging the will as well. The children were seeking freezing of assets that belonged to the father, and this was a new twist to the ongoing feud over the rupees 30,000 crore estate of late businessman Sanjay Kapoor, and Bollywood actor Karishma Kapoor's two children have approached the Delhi High Court seeking a share in their father's assets. In fact, the siblings have also accused stepmother Priya Kapoor, which is the third wife of Sanjay Kapoor, of forging Sanjay Kapoor's will and trying to gain total control of the assets. It has also been argued that the will is forged and fabricated, and the children had asked the court to declare them Class 1 legal heirs and to pass a decree of partition granting them a 1/5 share each in their father's assets. And as an interim relief, they had sought freezing of all personal assets belonging to Sanjay Kapoor until the matter is resolved. And on the back of this, that's the latest that we're picking up in terms of Priya Kapoor's statement, and this matter will be heard next on the 9th of October. No major moves in the stock. Again, continues to see gains of nearly 1%. But let me head across to my colleague Vansh to address the buzzing stocks in trade today. Vansh, over to you.
So let me start off with the Z Entertainment. While the IDBI Bank has filed a case against the company, claiming that the Z Entertainment owes them over 225 odd crores. Now the company says that the bank claims are fraudulent and meritless, and they believe that the bank is trying to damage their reputation, and they are also considering taking a legal action against IDBI Bank for the defamation. If I talk about the background of the case, back in 2022, IDBI Bank filed an application in respect of this same debt. Now, the application was filed by the bank in 2022, and which was dismissed by the Honorable NCLT back in May 2023. Later, an appeal was filed again in 2024, which was again dismissed on 7th of April 2025. So this is what it is in respect to Z Entertainment. Second on my list is HAL. Now, the company has signed an SSLV Tech Transfer Pact with InSpace, NSIL, and ISRO. Now, what's SSLV? Now, it's a 3-stage vehicle designed to launch satellite weighing less than 500 kgs. So this is one also interesting one to watch out for. Third one is the HEG Limited. Now the company has signed the company's arm Bhilwara Energy. The board has approved the allotment of 1.7 crore equity shares to Singularity and its affiliates. Now the allotment is at 142 rupees per share. The Singularity and its affiliates will be investing about 250 odd crores in Bhilwara. Now what's really interesting is that the Singularity AMC is backed by the ace investor Madhusudan Kela. So this one is also interesting to watch out for.
Vansh, thank you so much for getting us those details. Kush, I'll quickly come to you on Z first. Your view with regards to where charts are concerned?
Avoid.
Okay, all right. That's a pretty short and sweet answer. Avinash, with regards to HAL, we've seen the kind of order wins that the company has had, but we get a lot of questions on these defense counters, even on Ask Profit, and just want to understand that if one wants to have, let's say, 2 or 3 counters in their portfolio where defense counters are concerned, what would that 2 or 3 stocks consist of? Avinash, I think you're on mute. Yeah, okay, I think, yeah, I can hear you now.
So I think defense companies are definitely going to be fair to expensive in terms of valuation. So I think my suggestion is I think you can buy these stocks on a SIP kind of approach. Our choices would be typically companies which operate in the shipping sector. I think marine sector is going to throw open a very large opportunity. So something like a Muscat Dock or a Garden Reach. On the electronics aviation side, I think avionics side, you can look at Bharat Electronics. I think HAL, the biggest problem is, according to me, I think orders are excellent, a very strong trajectory. But unfortunately, as regards their Tejas aircraft, kind of run up, they are not getting the engines from GE. I think there's been a constant delay, on that front. So I think clearly, companies may have a lot of orders, but execution is also equally important. So I think in that respect, a BEL, a Muscat Dock, or a Garden Reach could be definitely good large cap choices. Again, the time frame has to be at least 2 years plus. I think at these prices, it's very difficult to visualize a very solid risk reward in the short term.
Okay, all right. So that's the view with regards to where these defense companies are concerned. But Kush, some counters that are actually seeing profit booking today, some auto names in specific, and there is also something like a KRBL which is seeing profit booking. On the other side, JM Financial is the one that's also seeing profit booking. Any of these names where you think that one can probably place a trade?
Mahima, I think if you recall yesterday in the closing show, I think as far as the auto sector goes, this is exactly what we discussed. These stocks had momentum a couple of days after the GST announcement as well, but they were then due for a round of profit booking. While some of these names still remain attractive, profit booking par for the course, I think on declines, you should have this, likes of M&M and TVS Motor, both of which are seeing cuts of about 2.5%. On both these stocks, about 2.5 on one and about 2 on another. Closer to support zones, so M&M closer to the 3,400, 3,500 mark becomes an interesting buy. As far as TVS goes, 3,400, 3,350, a good zone to accumulate. I would have these on my radar. Now, KRBL wasn't in a great structure anyway, giving way, so I would avoid that. Similarly, for JM Financial, it had a big run last month, but there has been consolidating. So I would give that one also a miss for now, rather wait and watch. But as far as something, buying on decline goes, some of these auto names are ripe for it. And the top picks for me right now are M&M and TVS Motors.
And Kush, opportune time to take your BTST as well. What's the call?
Sure. I've got a BTST today on Apollo, APL Apollo. The stocks actually had a fairly decent run. A couple of sessions ago, it's taken out the 20 and the 50-day moving average. Today, the stock was a little muted at the start of the session, but the recovery, thereafter in the second half has been fairly encouraging. So 1727, 1750 are your targets on the upside. 1660 is where you keep that stop loss. So APL Apollo as a BTSC trade could even turn into a good positional trade as well.
Okay, and Kush, also curious to know your view with regard to some of the PSU banks, because the PSU banking index is a buzz today, 2% higher. Let's pull up the constituents. And Kush, give us a view.
Short covering, more than anything else. Right now, I would categorize this as short covering. We know the entire banking pack was being sold into a PSU bank, no different. While I think HDFC and ICICI were, the bigger front of it. The other, stocks were also, taken into that stride. PNB taking support at the 200-day moving average, rebounding from there. Crucial resistance around the 107 mark. If that is taken out, you could see some sort of an upside on PNB. SBI 1825 has been a near-term resistance. If this is taken out, the further up could continue. So more of conditional trades right now, and hence I say this is more of a short covering rally. Should perhaps give them a couple of days more to see if these rallies extend. If they do, mind you, the catch-up trade will be very fast, and you could have a good big up move on some of these names. So definitely on the radar, but I wouldn't initiate a trade today.
And then I'm not so sure, Avinash, whether we got your view with regard to something like a Supreme Industries. Now, very interesting note coming through, 20% downside is what they see. On the flip side, on an Astral this year, 20% upside. What's your sense like on some of these plays? Of course, expensive where Astral is concerned, but a 20% upside from here looks interesting, and hence trying to take your view.
No, I think these are all compounding stocks, Harsh. I think clearly, even if you talk about a 20% upgrade, Astral is not a company which you can actually look at it from a quarter to quarter kind of basis. They are market leaders in their product categories. And most importantly, I think whenever the stock becomes a compounder, I think market participants don't look at the valuations immediately. They look at the next 2 to 3 years kind of time bucket. And based on that, I think, valuations look attractive. So I think, the point which is important is that these kind of companies are definitely not only going to, control whatever market share they control, but even enhance it over a period of time. Their product category and their management bandwidth is excellent. And I think you got a lot of marquee investors as well as institutional funds who are holding on the stock. So my sense is, yes, investors, typically from the retail category or somebody who wants to take a bet at these levels should at least give a time frame of at least 2 to 3 years. Only then you can make some money in these kind of stocks.
Astral. The other pack which is really seeing profit booking in today's session is Nifty Auto, a sector which was pretty much on the borderline, has turned negative right now. Maruti commentary very strong, a swing of nearly 16% is what they're looking at. Basis GST reforms in the small car segment as well. Kush, what are charts indicating with the fall that we've seen in terms of auto right now? Would you be a buyer or would you stay away right now?
No, definitely a buyer. It's just that, do you buy today or maybe a day or two, a day or two later? It's just that about where will this profit booking rally stem? That's the only question. Otherwise, the structure for something like an M&M, a TVS Motor, even an Eicher for that matter, are fairly strong. So once you've got this profit booking, out of the way, I think the next leg of rally will resume on some of these names, and it may not be as sharp as what we've seen, over the last 5-7 odd sessions. But definitely, these are some of the stocks that you need to keep, on your radar for a buy on declines. M&M, TVS, we already discussed. I think even an Eicher Motor is something you can add to that.
In terms of India-US negotiations that have restarted, you're seeing all your export-oriented sectors which are yet again buzzing in trade. We've spoken about seafood exports, but from your textile companies to your auto ancillaries, you have some of the chemical names also which have been buzzing since the last 2 trading sessions. What is your view? Taking the positive stance into consideration, the way forward into consideration, would you be a buyer currently because they've come off and probably seen a correction over the last couple of months? Avinash, this is for you.
Yeah. So I think, we have a structurally positive view on the auto component sector. And I think, looking at Donald Trump's tweets, I think it's very clear that in the next, say, 2 to 3 months, some solution is definitely going to come in. On a 50% tariff, no company or no industry can survive. In fact, on 25% import duty also, it's going to be extremely difficult. So I think, we are looking at integrated players in the textile space, something like Gokul Das or typically an Arvind. These are very structurally solid companies which have got a very strong kind of distribution and a very integrated kind of business model. And I think as far as auto component companies are concerned, players like Bharat Forge or Uno Minda or Sundaram Fasteners, they've got large presence in the US market. So I think you need to bet on these companies because in the short term, there could be pain. But in the longer term, I think, everything gets neutralized. And I think, these are companies where the management is well tested. So I think we like to, bet on these promoters. Finally, it's how the promoter tackles with this short-term pain. But longer term, I think a good amount of money is going to be made on these companies.
All right. Quick take with regard to an M&M. How do you see this one in particular? Quick call.
Definitely a buying opportunity on decline. So if you do get the stock close to the 3,400, 3,500 zone, you should take that as an opportunity to enter the fresh.
All right, 2.5% lower after what's been a dream of a run. Thank you so much, both of you gentlemen, for coming in and speaking with us, giving us all of those views. Let's pull up the Nifty 50 index. We're up just about 0.5% thereabouts in trade. Of course, we're closing in on the 25K mark, but we haven't reached it again. And we're off the day's highs by around 50 odd points. So broadly, that's the setup. The Bank Nifty is supportive for sure. So we've seen a 300-point rally there, 0.5% higher plus on the Bank Nifty. So that's the one positive. And then you also have the Nifty IT index doing everything that it is doing. And that is also aiding the overall sentiment on the Nifty 50 index. Let's pull out the heat map on the Nifty 50, beg your pardon. And of course, BEL, which is within the defense pack, but outside of that, you look at IT getting peppered on that top row all over. 1.8% higher both on Infi as well as TCS. You're also seeing a decent traction on Tech Mahindra, HCL Tech 2.5%, Wipro, what a move, 2.5% as well. 2% higher on an HDFC Life. Life insurance data coming through. SBI Life also 1.5% higher. So you're seeing good growth, especially where SBI Life is concerned. HDFC Life clocking just about a double-digit growth. M&M is the one which is the big culprit. Profit booking clearly visible on all of those auto names. And these have been the leaders of the index over the last few days. Today, the laggards, of course. So you're seeing across the board profit booking. The heavyweights doing nothing on a day like this. Look at what an HDFC Bank has done and closed absolutely flat. And so is a Reliance. Absolutely flat at close. So you're not seeing any movement at all on those. But some of the other stocks have moved. The PSU banking pack is the one which has surprised on the upside today. Let's pull out the Nifty PSU banking index. That's 2+% higher. And SBI is 1%+. Some of the smaller names which have seen very good short covering. And that's what's played out on the Nifty PSU banking index. Look at that. Just some of those names doing very, very well for themselves. Let's pull out the advanced decline as well. And thereafter, the Nifty mid-cap and small-cap indices. The advanced decline firmly, the bulls in control where the advanced decline is concerned. But of course, we've seen a tapering of a trend in that sense. And we've seen the gap shrink as the day has gone by. The Nifty mid-cap index 1% higher, so clear outperformance there, and has been a steady performer all through the day. The Nifty small-cap index also 0.7% higher, so that outperformance visible here on both of these indices. The BSE 500, top gainers, top losers, and those are some names for you. And Oracle Financial, 11%. What a move. Avanti Feeds, nearly 12.5% higher. Then you have some of the textile names coming back into favor. A Wellspun Living, a Vardhaman Textiles, an Intellect Design and a Zensar Tech also doing fairly well. And then some of the IT names, a Persistent and the like, have done well. So it's tilted towards some of these sectors today, the markets. JM Financial, the top culprit today on the BSE 500, down 7.5. But outside of that, outside of maybe 2-3 others, Lakshmi Organic, KRBL, not too many large losers to frankly talk about. So that's the texture. And, you know, with that, completely out of time on India market close okay, so we do have cues for tomorrow. You have US PPI, but outside of that, those are the adjustments that you need to look out for in terms of corporate action. Those dividend adjustments will come through tomorrow. So keep your eye out on some of these. And then you have a bonus issue on Patanjali Foods, 2:1. So again, something to keep your eye out on. But completely out of time on this edition of India Market Close from Hiral, Mahima, as well as myself and everyone who puts the show together. Thanks so much for watching. Stay with us on NDTV Profit as Market Express takes all of the action forward.
In a bold move to democratize financial insights, your channel, NDTV Profit, is turning a new chapter with its fresh tagline, "For Your Profit."
The agenda is to sort of step up and really bridge the knowledge gaps, highlight the opportunities a lot more, and make profit a shared possibility. So not just for a few, but also for the new.
Our revamped platform is all about breaking down barriers, delivering sharp market analysis, the latest trends, and essential business updates to people from every corner of life. Whether you're a seasoned investor or just starting out, no jargon-heavy reports. NDTV Profit makes profit accessible to all, empowering everyday folks with the tools and knowledge to navigate the financial world confidently.
We are speaking to everyone, whether you understand what EBITDA is or not. You don't have to. You don't have to know what ARPO is, but we'll still tell you what a telecom stock will do. You don't need to know what is RBOP. We will tell you what a hospital stock will do.
What we are trying to effectively do out here is responsible journalism. We're thinking of the audience and what every minute of the audience spending on a television channel or across our social media handles, what do they get out of it? Are we doing work enough for that? That is the question in the newsroom every single day.
From stock market swings to economic forecasts, it's your go-to source for clear, reliable info. Stay tuned as NDTV Profit redefines how you engage with business news.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
You're watching Market Express and I'm Sanjana. Let's get straight into the show. The Nifty managed to breach 25,000 and notched a fifth straight day of gain on continued optimism over GST rate cuts, hopes of a trade deal between India and the US. The Sensex jumped over 300 points. Advance decline ratio at close tilted in favor of advances. Broad-based gains were seen across sectors of IT, with the stocks leading the charge for a second day in the row. Defense players notched gains on back of major order wins. Auto media shut shop in the red. Oracle Financial Services software shares surged 10%, the biggest gain since 13 June 2024. Trading volume hit 18 times the 20-day average. The buzz stems from parent Oracle Corporation's bullish outlook as they reported a massive $455 billion in new bookings driven by 4 multi-billion-dollar deals. These include a commitment with OpenAI plus deals with TikTok and NVIDIA. Oracle projects 77 cloud infrastructure revenue growth this year, reaching $144 billion in 4 to 5 years. The US FDA inspected Sun Pharmaceuticals' Halol facility in Gujarat from June 2, 2025 and classified the facility as Official Action Indicated, OAI, signaling non-compliance with good manufacturing practices. Now, this plant is already under an import alert, blocking shipments to the US until compliance is achieved. Sun Pharma faces no immediate changes to financial estimates as the import alert was pre-existing. The OAI status highlights ongoing regulatory challenges for the facility. Sun Pharma must address these issues to restore compliance and resume exports to the US market. Cartrade Tech stock fell 10% after JM Financials downgraded it to sell with a target price of 2,350. The stock's high valuation at 43x in FY27 EBITDA is risky due to its reliance on cyclical B2B revenue. GST cuts may not linearly boost revenue, and OLX recovery hasn't improved forecasts. Emerging AI tools like ChatGPT pose a threat to traditional search, adding risk. Despite strong Q1 results, concerns over valuation persist. Seafood stocks like Avanti Feeds, Coastal Corporation and Apex Frozen surged after the EU approved 102 new Indian fishery units for export. This move boosts India's seafood exports by 20%, vital amid America's 50% tariffs. The approval signals trust in India's food safety standards and supports ongoing India-EU trade talks. The EU is India's second largest seafood market, and the decision is set to create jobs and boost foreign exchange. Logistics stocks in India plummeted by up to 50% over the past year. Policy uncertainty, including delays in reforms, hit investor confidence. Companies like All Cargo Logistics and TCI Express faced market share losses to competitors. Yield and margin pressures squeezed profits as costs rose. Softening demand and global economic headwinds like trade disruptions further dragged performance. Despite growth potential, these challenges sparked a sharp sell-off. JP Morgan sees opportunities in capital goods despite a slowdown. Capital expenditure growth is expected at 10 to 11% in the medium term. Stock prices reflect the slower pace, but some firms offer strong earnings potential. JP Morgan favors L&T, CG Power, Cummins and Thermax for growth and visibility. Trading multiples are now more attractive. However, Siemens and BHEL received underweight ratings. Goldman Sachs maintains a neutral rating on Amber, raising its target price to 7,330. Amber's PCB manufacturing could drive 12% of revenue by FY30. The company may double its share in India's PCB market. Export growth, however, will likely remain limited. HSBC maintains a buy rating on Aster DM with a target price of 680. The merger with QCIL is set to close by Q4 FY26. Both companies are boosting operations, with QCIL enhancing talent and technology. Growth in Kerala and Bengaluru markets is vital amid rising competition. CLSA maintains an outperform rating on Ultratech with a target price of 13,500. Ultratech expects demand to recover in the second half, aided by government measures. GST cuts and coal cess removal will lower costs. The company aims to sustain cost savings and boost capacity in wires and cables. UBS initiates a sell rating on Supreme Industries with a target price of 3,500. The industry leader faces tough times ahead. Growth challenges surpass those of competitors. Overspending on capital expenditure, weak returns, and unclear succession plans add pressure. UBS initiated a buy rating on Astral with a target price of 1,800 rupees. The company is set for strong performance in an industry upcycle. Astral's pipe segment will benefit from market tailwinds. Steady growth in other segments and smart capital spending will boost cash flow and returns. Sterling and Wilson Renewable Energy has secured a 1,415 crore letter of intent. It's from a private IPP developer. This marks their first private IPP order in FY26. The deal covers an EPC package for a 300 megawatt solar power plant in Rajasthan. The company's gross order inflow now exceeds 2,400 crore this year. MTAR Technologies has clinched a 386 crore order from Bloom Energy Corporation. These fall in the clean energy fuel cell segment. 205 crore will be executed by Q4 FY26. The remaining is set for Q1 FY27. The company's order book stands at 930.21 crore as of June 2025. MTAR shares soared nearly 5% today. HEG Limited's arm, Bhilwara Energy, has approved the allotment of 1.76 crore equity shares. These go to Singularity and its affiliates, and the price is 142.08 per share. This brings in 250 crore rupees of investment. Singularity AMC is backed by Madhusudhan Kela, and the deal gives them a 9.6% stake. It aids Bhilwara Green's energy push as HEG retains 44.3% control, and shares may rise further with an option for another 253 crore. Hindustan Aeronautics has signed a key pact with ISRO in space and NSIL. It covers technology transfer for the small satellite launch vehicle. HAL will absorb the tech over 2 years, and then the company enters a 10-year production phase. The SSLV can launch satellites up to 500 kg into low Earth orbit. This deal lets HAL mass produce for domestic and global markets. Sri Lotus Developers has won a key appointment. It will develop an ultra-luxury project in Bandra West, Mumbai. The site sits close to the famous Bandstand Promenade. This prime location boosts the project's appeal. Bandra West draws high-end buyers with its sea views and vibe. The deal marks a thumbs up for Sri Lotus. It strengthens their footprint in luxury real estate, and details on project size and timeline remain pending. Investors eye this as a growth signal for the firm. Mumbai's property market stays hot for premium spots. Voltamp Transformers promoter Kunjal Patel sold a large portion of his shares, reducing his ownership to 30%. The deal fetched a significant amount. New investors including ABSL Insurance, Bajaj Alliance Life Insurance, Citigroup Global Markets Mauritius, Prudential Assurance and UTI Small Cap Fund picked up stakes. The sale doesn't shake Voltamp's operations or market outlook, keeping things neutral. It is a reshuffle of ownership, with the promoter still holding a strong position. The Association of Mutual Funds in India, also known as AMFI, released data for August showing a 22% decline in net inflows into actively managed equity mutual funds at 33,430 crore versus 42,702 crore in July. Large cap funds saw improved inflows into 2,835 crore. However, mid and small cap funds recorded a significant drop in inflows to 3,193 crore and 4,993 crore respectively. Sectoral and thematic funds also saw a sharp fall in inflows to 3,893 crore, and new fund offers were subdued, raising 2,859 crore. The overall mutual funds industry's assets under management stood at 75.19 lakh crore. Non-life insurance premiums reached close to 25,000 crore in August, up 1.6% year-on-year. Bajaj Alliance led with over 2,000 crore, growing 19%. Go Digit followed with 738 crore, up 13%. New India Assurance and ICICI Lombard saw modest gains. Star Health and Niva Bhupa reported slower growth. HSBC reports a slowdown in insurance sector growth. Individual annualized premium equivalent sales dropped 10% month-on-month. Policyholders are delaying purchases, expecting GST rate cuts. Weak trends may persist in September 2025. Growth is expected to rebound from the third quarter of FY26. Life insurers' margins may face pressure after GST changes. Morgan Stanley notes that non-life insurance premiums grew 2% year-on-year in August, down from 6% year-to-date. Private multi-line insurers saw flat growth impacted by accounting changes for long-term policies. Standalone health insurers reported 4% growth, slower than July's 10%. Niva Bhupa's premium rose 3% year-on-year. Morgan Stanley also notes a broader slowdown since October 2024. The Delhi High Court ordered Priya Kapoor to disclose all assets of the late Sanjay Kapoor, and this follows a heated inheritance battle over a 10,000 crore estate. Rani Kapoor, his mother, alleges a suspicious 500 crore asset sale. Karishma Kapoor's children claim a forged will, seeking 1/5 each. Priya Kapoor says they got 1,900 crore. The next hearing is on October 9th. IDBI Bank has filed a new insolvency case against Zee Entertainment. It claims a 225.23 crore default. The debt ties to loans for City Networks, where Zee acts as a guarantor. Past pleas in 2023 and 2025 got dismissed due to COVID moratorium rules. Zee slams it as harassment and vowed to contest. The firm eyes a defamation suit against IDBI. Novo Nordisk, the maker of obesity drug Wegovy, announced plans to cut around 9,000 jobs globally, about 11.5% of its workforce. Half of these cuts, roughly 5,000, will be in Denmark. The restructuring aims to save $1.25 billion annually by 2026 and accelerate decision-making amid rising competition, especially from US rival Eli Lilly, CEO Mike Dostar said the company must adapt to a more competitive obesity market by streamlining operations and reallocating resources to growth areas. Novo Nordisk also lowered its 2025 profit growth forecast due to these changes. The company faces slowing sales of Wegovy and Ozempic, especially in the US. Apple's launch event wrapped up with big reveals. The iPhone 17 series leads the pack. iPhone Air stands out as the thinnest iPhone yet. iPhone 17 Pro brings bold design and top performance. Apple Watch Series 11 offers smarter health tracking. AirPods Pro 3 adds live translation features. The event ended on a high note with UAE pricing details. Meta has been accused of covering up harms to children from its VR products. Whistleblowers Jason Satizan and Kate Savage say the company buried evidence of risks. Meta denies the allegations and insists research was not restricted. The hearing comes against the backdrop of ongoing concerns about youth safety on Meta platforms. The IMD has issued a heavy to very heavy rainfall warning for over 20 states and union territories as the monsoon intensifies. Red alerts are active for Himachal Pradesh, Uttarakhand, Chhattisgarh, Odisha, Gujarat and Madhya Pradesh, with extreme downpours risking flash floods and landslides. States like Punjab, Haryana, Rajasthan, Maharashtra and northeastern regions face thunderstorms and gusty winds through September the 11th. Curfew-like restrictions have been imposed and internet services have been suspended in Jammu and Kashmir's Doda district following massive protests and clashes over the arrest of Aam Aadmi Party MLA Mehraj Malik. All the board exams have been postponed across the state in the wake of these disturbances. A vote of confidence coming in from President Trump as he signals a thaw in the bilateral relations between India and the US. Trump hopes for a successful conclusion and calls PM Modi a very good friend. Reciprocating the same, the Prime Minister says our teams are working to conclude these discussions at the earliest. Nepal's army has enforced a nationwide curfew after 2 days of violent Gen Z protests. Protesters vandalized government buildings and attacked leaders. Soldiers now guard parliament in the deserted Kathmandu streets. The curfew lasts until 6 a.m. on September the 11th. It aims to curb ongoing criminal acts like looting and arson. Essential services like ambulances can operate. The army urges citizens to avoid misinformation and support peace efforts. India has placed its border with Nepal on high alert amid violent protests. The Sashastra Seema Bal and state police now guard the 1,751-kilometer frontier. Movement of citizens and goods stands restricted to prevent spillover. The Indian Army troops deploy at the embassy in Kathmandu, the hub of mob violence. Air travel halts as Nepal's airports shut down. India urges nationals to stay cautious and avoid non-essential trips. Nepal's PM KP Sharma Oli resigned under pressure, where at least 19 people have been left dead in clashes over social media ban and corruption. France's political chaos deepened as President Emmanuel Macron names close ally Sébastien Lecornu as the new prime minister just a day after Bayrou's government fell in a no-confidence vote over austerity measures. The 39-year-old former defense minister, a Macron loyalist since 2017, is tasked with forging consensus on the 26 budget amid a divided parliament. In a dramatic escalation, Israel launched a deadly airstrike on Hamas leaders in Qatar's capital Doha, killing 6 people, including a Qatari security officer and the son of top Hamas negotiator Khalil al-Hayya, amid ceasefire talks. The IDF called it a precise hit on those behind the October 7th attack, but Hamas claims its senior delegation survived, accusing Israel of sabotaging peace efforts. Qatar slammed the cowardly assault as a violation of sovereignty, with the UN, US, EU, Saudi Arabia, UAE and others echoing condemnation, warning it derails Gaza mediation. Poland shot down Russian drones that entered its airspace today, and this marks the first time a NATO member has fired during the Ukraine war. 19 objects crossed in during a massive Russian attack on Ukraine. Prime Minister Donald Tusk called it a large-scale provocation and activated NATO's Article 4 for consultations. Russia denied the claims, calling them groundless. European leaders see it as intentional escalation. Airports in Warsaw and Lublin closed briefly. Ukraine's Zelensky demanded a joint response from all partners. In a stunning upset in La Paz, Bolivia defeated Brazil by 1 goal to secure a crucial victory in CONMEBOL World Cup, qualifying and propelling them into the playoff round for the 26 tournament. Trailing in the standings, Bolivia's high-altitude home advantage proved decisive, with goals from key attackers sealing the win against a star-studded Brazilian side that dominated possession but faltered in thin air. This marks Bolivia's first appearance in the intercontinental playoffs, a massive boost for the underdogs who struggled in past campaigns. Brazil, now facing pressure to rebound, slips further in the table amid coaching scrutiny. Afghanistan kicked off the T20 Asia Cup 2025 with a bang, demolishing Hong Kong by 94 runs in Abu Dhabi. This marks their biggest ever victory by runs in the tournament's history. Batting first, they posted 188 for 6, powered by Sadiqullah Atal's unbeaten 73 off 52 balls. Hong Kong crumbled to a 94 for 9, with Gulbuddin Naib and Fazal Haq Farooqi grabbing 2 wickets each. This third biggest Asia Cup T20 win boosts Rashid Khan's side in Group B. And that's a wrap on Market Express. Stay tuned to NDTV Profit. We've got Profit 360 up next.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, whoa, whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better.
Nifty drops below the 25,000 mark and the Sensex falls 300 points, reversing early gains from a strong first half of trade. Auto stocks led the decline. Mid-cap and small-cap mutual funds saw lower inflows in August, while sectoral, thematic and new fund offerings recorded a sharp drop from the previous month. India and the US will resume trade talks as tensions ease, with American negotiators set to visit New Delhi soon. Both sides remain hopeful of finalizing the first phase of the deal by October. Finance Minister Nirmala Sitharaman said India is keeping all doors open to the US, speaking at an exclusive town hall during the NDTV Profit GST 2.0 conclave. Trouble intensifies for Anil Ambani as the Enforcement Directorate files a new money laundering case against him and Reliance Communication. The case stems from a CBI FIR in August accusing them of causing losses to SBI. The Delhi High Court issues a notice on a plea filed by Bollywood actor Karishma Kapoor's two children, Samaira and Kian, seeking a share in the assets of their deceased father, industrialist Sanjay Kapoor. IDBI Bank files an insolvency plea against Zee Entertainment for a default of 225 crore rupees. Zee Entertainment threatens defamation in return. Sprite Agro plans to issue 10 bonus shares for every one held by a shareholder and a 100% dividend, despite being under SEBI's radar for suspicious stock-related activities. India tightens security along Nepal border amid violent protests, deploys army at the Indian embassy in Kathmandu, urging Indian citizens to exercise caution and defer non-essential travel to Nepal. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's take you through the latest in markets as well as national and international news. Let's take a look at how the markets fared today. We saw benchmarks sparing early gains as profit booking at higher levels dragged markets lower. Sensex, which had surged nearly 500 points in morning trade, retreated nearly 300 points from the day's high to 81,339. Nifty slipped below the key 25,000 mark to 24,952. On a sectoral front, we saw Nifty Auto decline for a second straight session after a 4-day rally. But for more on this, let me quickly go across to my colleague Harsh with a wrap of all the market action for the day.
Well, we briefly breached 25K, but we came back off and we were actually somewhere between the 25,050 mark and maybe the 24,950 mark pretty much all through the day. So that 100-point band is broadly how we traded. We closed around 60 odd points from the day's high. And it was essentially a second straight day where IT really dominated the day of trade. All the constituents on the Nifty IT index were in the green and showed very, very good strength through the day. In fact, on the Nifty 50, again, that rotational piece is at play, where you have auto stocks actually now replaced by IT, and you have those big 5 IT players peppering the top 10 gainers of the Nifty 50 index. So it was a fairly good day of trade in that sense. When you're looking at what's happened in auto, actually it's the exact reverse. You've seen some bit of profit booking come through. M&M was the top loser in trade, 2.5% lower, and it'll be interesting to see how the rest of the week plays out for auto, because it's been such a fabulous run since maybe the 15th of August that now that run seems to be cut short by just a little bit. When you're looking overall at some of the other names that did well, it was the PSU banking names as well as the defense names. BEL was the top gainer on the Nifty 50, up nearly 5% in trade today. Not too many times that we see that name. And some of the heavyweights, Reliance as well as an HDFC Bank, absolutely flat in trade. They've closed at the flat line. But that's with regard to the Nifty as well as some sectoral updates. Let me talk a little bit about the advance decline. Largely steady through the day. The advances outstripped the declines by quite a bit, so that was strong. 3:2 in favor of the advances. The second piece is the Nifty mid-cap and small-cap indices outstripped the Nifty large-cap index by quite a bit. So you saw 0.7% of gains for the Nifty small-cap. The Nifty mid-cap was up nearly 1% in trade. So good strength shown by both of those. You had certain pockets which did well, textiles, shrimp stocks and the like, largely on the back of export positivity that's starting to get built up, and that theme was at play with good gusto pretty much all through the day. On the BSE 500, JM Financial was the top loser, 7%, but outside of that, not too many material losers on the BSE 500. So again, that's the day of trade, more positives than negatives.
Thanks for that, Harsh. And what would trigger a real sustained market rally? Gurmeet Chadha of Complete Circle feels that earnings would be the only prompt for this. Let's listen in.
I think somewhere probably the FI positioning is still on the shorter side. They are net short, barring maybe yesterday's one odd figure. There's been persistent selling, and that's getting reflected in the market. So I think the bigger trigger in the market would come. Obviously, any truce with US and withdrawal of tariff could be a short-term trigger. But I think a sustainable long-term trigger is double-digit earning growth. And I think all these reforms, when they get reflected in earnings, and also volume growth with pricing, is when you'll probably see a more durable or maybe a larger move rather than just 1 or 2% here and there.
And an interesting IPO opened today, Shringar House of Mangalsutra, which is a manufacturer of gold Mangalsutra for corporates, retailers and wholesalers. My colleague Vikash caught up with management. Let's listen in.
Hello and welcome to IPO Adda. Today I'm joined by the top management of Shringar House of Mangalsutra. This company is coming up with its IPO, and the IPO will open on 10th of September and close on 12th of September. The company is planning to raise close to 400 crores from this issue, and which is entirely a fresh issue. Shringar House of Mangalsutra is one of the leading and specialized designer and manufacturers of Mangalsutra in India. Let's speak to the management and understand the business more. I have with me Mr. Viraj Thadeshwar, who is Director and CEO of Shringar House of Mangalsutra. Welcome to the show, Mr. Viraj, and thank you so much for giving us time. My first question to you will be, tell us a bit about your business. What do you do and where do you operate?
So, sir, Shringar is a company which is into manufacturing, Mangalsutra, gold Mangalsutra manufacturing, with an expertise of designing, manufacturing and supplying of Mangalsutras to the corporates, to the retail sector and the wholesale sector. And the experience the company holds is of more than 4 decades. And the company was incorporated in 2009 and currently holds 6% market share in its sector.
Mr. Viraj, you are raising close to 400 crores. So how do you plan to utilize this fund?
So the key point for raising this fund is working capital. As our business, the nature of business involves working capital in a heavy way. So to increase our sales base, to increase our customer base, and especially I would like to emphasize on the existing customers. Today Shringar is working with almost 34 corporate customers who are the leaders of the industry, and they have good aggressive plans in the future, and to cater to them and be along them in their journey and grow with them. Shringar needs to grow and increase the working capital.
Mr. Viraj, if you can tell us a bit about your client list, if you can name some of them, can you tell which are your biggest clients currently in India? Because I can see on your site all the major brands, all the major jewelry chains are listed as client list.
There are a lot of customers working with us. So the few I would like to name the leaders are Tanishq, Malabar, Reliance, Joya Lucas, and many more.
I want to understand your client mix also. So do you supply to all the big jewelry chains only, or do you supply to the retail customers also?
We are into pure B2B. So one is the corporate sector, the corporate chains, and the other are the standalone stores, the single stores, which also has a large market share in the industry. So we cater to both the sectors, even the single stores. We are planning to increase and penetrate deeper in the market in the 2-tier, 3-tier cities and extend our reach.
And what is the revenue mix if you see between these corporate clients versus retail client? What is the percentage they are sharing?
Corporate companies give us a 34% of the total revenue we do, and the rest comes from the retail and the standalone stores.
Mr. Viraj, what is the current margin level and how do you plan to increase it or maybe maintain it?
So the net margins we are at right now is nearly 4.2% approximate.
And how do you plan to maintain or increase it maybe? Is there any gap, is there any room available to increase it?
Yes, definitely. We will try to, of course, increase the margins by increasing our efficiency and producing more, working more with the existing fixed costs and increasing operational efficiency as well.
Mr. Viraj, one last question on your products. So your 100% of revenue comes from Mangal Sutra. So are you planning to diversify your product list too? Are you planning to go into some other segments, some other products? Are you willing to start that?
See, currently what I foresee is Mangal Sutra market is a very vast market, and we would like to encash and proceed more and more further in the same market. And but in case we feel and if the market demands for a new product, a better product, or some new trend comes up in the market, we would definitely like to explore it.
Thank you so much, Mr. Viraj, for connecting with us and giving us time. And we wish you all the best for your IPO too.
Now, the Association of Mutual Funds in India has released data for August. Actively managed equity mutual funds recorded a 22% lower inflow as compared to July. However, Indian investors remain glued to gold exchange-traded funds for a fourth straight month. My colleague Alex Matthew joining in with a breakdown of how the different categories of assets have performed. Alex, over to you.
A steady set of numbers for the mutual fund industry in the month of August. And the most important number first, of course, and that is SIPs. Inflows through this route on a gross basis have stood at 28,268 crore rupees. Yes, it's a dip from the all-time high that was recorded in the month of July, but it's not much of a dip. In July, that number stood at 28,464 crore rupees. Now look at the headline number, which is the net inflows into the mutual fund industry as a whole. That number is come in at 52,443 crore rupees or thereabouts, and it's a pretty substantial fall on a month-on-month basis, and that number stood at 1.8 lakh crore rupees at the start of July. Some part of this, or actually a large part of this, is explained with the inflows into fixed income mutual fund schemes, which generally are very high at the start of the quarter and dwindle over the course of the remainder of the quarter. So there's actually an outflow from fixed income mutual funds in the month gone by of about 8,000 crore rupees, and that explains some of this. The inflows into actively managed equity funds have actually been pretty robust if you remove the new fund offers from the picture. Compared with the previous month on a holistic basis, inflows stood at 33,430 crore rupees compared with over 40,000 crore rupees. But this is because there was nearly 9,000 crore rupees of inflows in the previous month, that is in the month of July, on account of new fund offers. And in this month, it was only about 2,000 crore rupees or thereabouts. Solid inflows in quite a few categories, not least to which flexi-cap funds as well as multi-cap funds, but also small-cap and mid-cap funds. Those last two, once again, for the second month in a row, getting inflows of over 10,000 crore rupees. That is something that reflects the robustness of the inflows into equity mutual funds on the whole. A couple of other points: you have had robust inflows into hybrid schemes once again, over 15,000 crore rupees. And interestingly, the other ETF category, which is something that is used to track the passive inflows, has come in at over 7,000 crore rupees, which has been pretty robust as well. All told, good set of numbers for the mutual fund industry.
Right, Alex, thanks so much for that. Let's move on to our other top focus today, the India and US ties. Sources tell NDTV Profit that the 6th round of the India-US trade talks is currently underway, with both sides eager to reset ties. US President Donald Trump has expressed his intention to speak with the Prime Minister soon in an effort to break the deadlock after tariff disputes. Washington is signaling a softer tone while India is emphasizing its role as a natural partner. Let's go over to my colleague Rishabh, who's been tracking the story very closely for more details on the latest developments. Rishabh, over to you.
Right, an overnight change in the trade scenario between India and US. A social media post coming out from Donald Trump stating that India and the US are back on the negotiating table. You had the Prime Minister acknowledge it very, very quickly as well. He said the fact that both the countries are working on concluding these talks at the earliest. This is a major sort of relief coming in for Indian exporters, for Indian industry at large, which have been facing the pain of these 50% tariffs for over a month now. What we're also picking up is the fact that this cancelled US trade visit that was supposed to happen in August, wherein a large delegation and a very senior delegation of US trade officials was to visit India for the 6th in-person round of negotiations of the bilateral trade agreement. That is something that can be rescheduled very, very soon. There is no current date or timeline on that, but what we can expect is that it will happen very, very soon. Both sides remain very hopeful that the first tranche of the BTA or the bilateral trade agreement can be concluded by the fall deadline. That was the earlier ambition that the two leaders had, and that is likely to be done now, given that trade talks are resuming. What we're also learning is the fact that India will continue to stick to its red lines on agriculture and dairy, so no sort of budging on that. That is something that has been proclaimed by the Prime Minister, by the Commerce Minister, and other top ministers as well. The fact that the interests of MSMEs, farmers, livestock holders, and fishermen, the government will continue to protect all of their interests in any and all trade deals going forward. So clear sign of a thaw in all these tariff tensions that have been boiling over the past 3 to 4 months. And now all eyes on the fall deadline, or by October end or October mid is when we can expect more and more action to unfold on the India-US trade deal front.
Thanks for that, Rishabh. In fact, Finance Minister Nirmala Sitharaman at the NDTV Profit GST conclave just yesterday said India is keeping all doors open in these ongoing trade talks with the US. Diplomatic teams are actively engaging, aiming to resolve issues amid tariffs. Let's listen in.
From our side, we are keeping all the doors open, if I can use that expression. The diplomatic teams are engaging with the US. The trade negotiations can still go on. So we don't, from our side, we are not making anything difficult for others, one. And second, FDI has also come through various other routes. They come through investment, wealth funds, sovereign wealth funds. They also come through various other destinations from where funds are managed. So I'm not saying this is not going to have a bearing. It will have a bearing, but we are trying to offset it. We are not engaging with other countries, other FDI sources. So work is on. I can assure that much.
Meanwhile, trouble has deepened for Anil Ambani as the Enforcement Directorate has filed a fresh money laundering case against him and Reliance Communications. This case relates to an alleged bank fraud amounting to 2,929 crore. Let's go over to my colleague Mukesh Singh Sengar for the latest updates. Mukesh ji, क्या आप हमें बता सकते हैं कि ये नया मनी लॉन्ड्रिंग केस किस तरह अनिल अंबानी और रिलायंस कम्युनिकेशंस को प्रभावित करेगा?
देखिए, सीबीआई ने इसी साल अगस्त में एक नया केस दर्ज किया था जिसमें अनिल अंबानी और उनकी कंपनी जो है आरकॉम, दोनों ही इस केस में अक्यूज हैं। और उसी केस को बेस बनाते हुए अब ईडी ने एक नया मनी लॉन्ड्रिंग का मामला दर्ज किया है और वही आरोपी हैं अनिल अंबानी और उनकी कंपनी जो है आरकॉम। इसमें एलिगेशन ये है कि एसबीआई से करीब 2929 करोड़ रुपए का जो लोन है वो लिया गया और बाद में इस लोन को अलग अलग कंपनीज में डाइवर्ट कर दिया गया, बहुत सारी सेल कंपनीज में डाइवर्ट कर दिया गया है। तो ईडी ने ये फ्रेश केस दर्ज किया है और ईडी बहुत जल्दी ही इस मामले में जो अनिल अंबानी है और साथ में उनकी कंपनी है आरकॉम, उसमें छापेमारी कर सकती है। इससे पहले भी ईडी ने अनिल अंबानी के ठिकानों पर रेड किया था। वहीं सीबीआई ने भी एक दूसरे केस में जो बैंक का केस था फ्रॉड का, उस केस में भी सीबीआई ने उनके घर पर रेड किया था। तो ये जो नया मामला है इसको लेकर जो ईडी है वो मनी लॉन्ड्रिंग के तहत जांच कर रही है और बहुत जल्दी ही इस केस में अनिल अंबानी और उनकी कंपनी रिलायंस कम्युनिकेशन के ठिकानों पर छापेमारी की जा सकती है। जी,
इस नए केस के खिलाफ अनिल अंबानी की तरफ से क्या प्रतिक्रिया मिली है और आगे की कार्रवाई में क्या उम्मीदें हैं?
देखिए, अभी तक अनिल अंबानी की ओर से इस नए केस के बारे में कोई भी इनका स्टेटमेंट अभी तक नहीं आया है, क्योंकि मामला बैंक फ्रॉड का है, 2929 करोड़ के बैंक फ्रॉड का है। इससे पहले हमने देखा था कि जो ईडी है उसने 17,000 करोड़ के बैंक फ्रॉड में अनिल अंबानी को दिल्ली के हेडक्वार्टर में पूछताछ के लिए बुलाया था। इसके साथ में उनके जो प्रमोटर्स हैं, डायरेक्टर्स हैं, बहुत सारे जो उनके एसोसिएट्स हैं, उनके ठिकानों पर ईडी ने रेड भी की थी और 17,000 करोड़ में का जो बैंक लोन फ्रॉड का मामला है उसमें अलग अलग बैंकों से अलग अलग टाइम पर लोन लिया गया था। तो अब ये नया केस दर्ज हुआ है जिसमें एसबीआई से 2929 करोड़ रुपए का लोन लिया गया है। निश्चित तौर पर अनिल अंबानी की मुश्किलें बढ़ने वाली हैं, क्योंकि एक के बाद एक उन पर मनी लॉन्ड्रिंग के मामले या फिर जो चीटिंग के केसेस हैं वो लगातार दर्ज हो रहे हैं और निश्चित तौर पर उनकी मुश्किलें बढ़ने वाली हैं।
बिल्कुल मुकेश जी, थैंक यू सो मच हमारे साथ जुड़े रहने के लिए। लेट्स मूव ऑन नाउ एंड टेक यू टू अनदर केस दैट वाज इन द Delhi High Court today. Karishma Kapoor's children Samaira and Kian have taken their fight to the Delhi High Court over their late father Sanjay Kapoor's 30,000 crore rupee estate. The case turned combative in court as Sanjay's widow Priya Kapoor pushed back against the stepchildren's claims. Her lawyer argued firmly, saying, I was his last lawfully wedded wife, and dismissed the suit as non-maintainable. For more on this, let me quickly go across to my colleague from NDTV, Nupur Dogra.
First of all, Karishma Kapoor's two children, Samaira Kapoor and Kian Kapoor, have moved the Delhi High Court claiming that the personal assets left behind by Sanjay Kapoor in a will that has been forged. Now they claim that the will, which deals with only the personal assets of Sanjay Kapoor, was forged by Priya Sajdev Kapoor, and they have been wrongfully excluded from the same. Remember, the assets under the personal will is different from the assets they will be inheriting from the RK Kapoor Trust, which is separate from the personal assets of Sanjay Kapoor.
Meanwhile, Priya Kapoor has issued a statement stressing that Sanjay's children had already received a beneficial interest of over 1,900 crore rupees through a family trust. She added that she has been fully cooperating to secure and facilitate their share. Let's go across to my colleague Vishwanath for more on this.
So according to a statement that was issued by Priya Kapoor Sachdeva, there's been a case that is going on, of course, where Karishma Kapoor and Sanjay Kapoor's children have gone ahead and raised issue with the way that the will has been executed after Sanjay Kapoor's death. And the statement says that these children were asked to sign a non-disclosure agreement before they were given access to the will, which they have refused. And that is something that the court has also noted, and the court has directed expected these children to sign the required NDA. Alongside that, what they've said is that 5 days before the will was executed, or this case was filed by Sanjay Kapoor and Karishma Kapoor's children at the Delhi High Court, 5 days before that, it was clarified that these children would get about 1900 crore worth of assets which belong to Sanjay Kapoor's trust. That is part of the will.
SBI Bank has filed an insolvency case against Zee Entertainment. Now the bank has alleged a default of 225.23 crore rupees along with interest and other charges. For context, similar cases of insolvency in 23 and 2025 were dismissed, and recovery claims under other laws have also failed. To tell us more about what's happening and what Zee might actually do as a response, my colleague Charu now joining us in. Charu, give us a background and context of this entire case, and more importantly, what Zee's response is.
So the IDBI Bank has gone up to the Mumbai bench of National Company Law Tribunal and started insolvency proceedings against Zee Entertainment. Now what has happened is that they are claiming that there has been a default of the loan amount of over 225 crore rupees. This loan was taken in association with City Networks. What is the case is that Zee is supposedly the guarantor of the agreement as per the loan was given for City Networks. Now since it was the guarantor and the loan was not paid as per IDBI Bank, they are coming forward with insolvency proceedings. Now, as per the law, this quantum is enough to initiate insolvency proceedings against a company. However, Zee in an exchange filing has claimed that all the allegations that have been made by IDBI Bank before the Mumbai bench are baseless. They do not hold any merit, and in fact, it may, start defamation proceedings against the bank for any, these sort of claims and allegations, and may also counter their suit very ferociously. Apart from this, we also know that such cases have been filed before Mumbai and Delhi benches of several tribunals, including the National Company Law Tribunal, National Company Law Appellate Tribunal, as well as the Fund Recovery proceedings that are initiated by banks in case of default payments. All this has been done previously on several accounts, but the cases have either been dismissed or are currently in appeal, so it remains to be seen how it goes forward.
Right, Charu, thanks so much for that. And let's now get you the latest in the Nepal protests. The Tribhuvan International Airport in Kathmandu has resumed flight operations. And this move comes after the army took charge of security operations in Nepal and said that curfew orders will remain in force for today and tomorrow. Violent mobs torched the Nepal Supreme Court earlier today. Nepal Army Chief Ashok Raj Sigdel has called for a dialogue with the protesters. And 7,000 kilometers away, France's newly named Prime Minister, Sébastien Lecornu, is already dealing with massive protests being staged across the country. This is in a bid to block everything in anger at the political class and plan budget cuts. The protest has disrupted traffic and over 100 people have reportedly been arrested. The grassroots movement has called on disgruntled voters to show dissatisfaction over the messy state of French affairs with the act of civil disobedience. This resulted in protesters blocking transport networks, public buildings and other services. Keep in mind that Lecornu was only appointed as France's new Prime Minister on Tuesday after the ouster of Prime Minister François Bayrou at the start of the week. He is President Emmanuel Macron's fifth Prime Minister in less than 2 years. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Anushi Vakharia. And Anushi, at the back end and at the power generation end of things, there's plenty happening. And therefore, the immediate large opportunity does not only sit in transformers, but also sits on the smart metering side.
Absolutely.
And that's why we are bringing in Genius Power today to try and talk about that. Therefore, it'll give us a perspective on the entire value chain, but more importantly on the front end, what's happening on the smart metering execution. And there's some very, very sharp execution happening. What probably Genius Power has not done its entire lifetime is probably doing in single years, literally a crore meters being set up, and thereafter the O&M and the kind of growth that we're seeing here and the visibility of growth is extremely strong over the next 8-10 years. The order books are completely full. But really, there's one key problem. It's the cash flow, because a lot of these are government tilted projects and therefore cash flow unwind is taking a while now. And due to that, what is also happening is the debt of the company has gone up. So I want to understand both of those factors. Will the cash flow come through and how quickly? They've guided that FY27. FY26 will be a positive year where operating cash flow is concerned, is what they've said. FY27 is when the real unwind in a large fashion will start. And what they're also saying is there's going to be a tilt towards O&M, which is on the maintenance side of things. So when you have that tilt coming through where O&M is concerned, your cash flow realizations will improve automatically, is what they are saying. Now, in terms of the third piece that I want to understand, it's on the smart metering side. They've said that they'll set up 80 to 90 lakh smart meters. That's the guidance. The current capacity is at around 1.1 crore odd, and maybe more than that. But my point is that that will continue to go up. The guidance seems to suggest that by FY27, the smart metering in terms of units will be at 1.1 to 1.2 crore. So which will be sizably larger than even the guidance for FY26. So growth here is going to be extremely strong. But can there be upside in FY26 itself? And we're seeing signs of that. The order book is at 30,000 crore. I did speak about that. I want to understand product versus O&M. What's the split going to be like as the growth continues to kick through here? Because the visibility is clear. So therefore, trying to understand what the split on the order book side of things is and what the revenue recognition will be like maybe once things start to stabilize a bit, because they are in a very, very high growth phase. Now, let me also talk a little bit about the new opportunities. There's gas, there's water. Again, both of those are on the metering side of things, and those opportunities are also fairly large. I also want to understand, and this is obviously an extension to the gas as well as the water opportunities. But outside of that, whether they're looking at any other opportunities and opportunities in the export space, I would be keen to know whether they are seeing that or they're only looking domestically. Currently, Anushi, they're pretty much entirely domestically focused. Absolutely. But the export opportunity could well be large. And how much of that are they looking at or are they looking to tap into is really the other piece I'd want to know.
They're already eyeing some key geographies that are there, that includes the Middle East regions as well as Africa. So, we
Australia, New Zealand as well.
Oh, that's
so
interesting.
all of that. Yeah, so all of that is what they're targeting, and therefore you could well see some of those opportunities actually translate. And the last piece is, can margins scale up, and what's the capex like? Because obviously with such strong growth, how are they planning all of that? And therefore, as a result of this, again, I'll go back to that earlier point on debt, on how they are expecting debt to play out as well. So all of that is what we'll try to cover today on KYC. But let me first start off with about the company, and let me hand it over to Anushi to start that off.
Well, thanks for that. So, as you know, we just started off the show with talking about smart metering solutions. Now, the company is one of the key players in this particular region that we are looking at. And this is mainly for utility side of the business that we are looking, that the company provides it. Now, diversifying in water, gas as well, which brings to our second point, about what the company essentially does. It manufactures and deploys, the deployment is for electricity, gas and water meters. That is what we are looking at, with this being the upcoming opportunity for the business. It also focuses on advanced metering infrastructure across India. It has platforms like GIC as well, which it had tied up in 2024, from which now it is driving substantial portion of its revenues as well. Now, if you just look at the overall opportunity, also 99% of its current revenue is government linked, as Harsh spoke about earlier. But I just want to draw attention to the fact as well that, India is also targeting installation of 30 to 31 crore smart meters, and this is by FY30 to 31 that we are looking at. Current installations that we've seen so far is 3 crores, and about 14 crore of orders have been placed. So Harsh, that emphasizes on the kind of opportunity that is there in these upcoming years. But in terms of product mix, let's just walk through that as well.
Well, yes. So let's start off. The smart electricity meters, we spoke about that. This, of course, what it does is it measures, uses, enables remote reading stroke control. That's broadly the use. Then there are prepayment or net meters where you pay before the use, and net metering is especially also used in solar. You have smart or grid meters used for power infra, large grid meters, and it enables for grid accounting as well. Where have the units gone, and whether there's a reconciliation between units, again important. Then you have a new product line, smart gas and water meters. This is used by city utility companies for households as well as offices, of course. And then you have advanced metering, which is data management, analytics, billing, apps, and the like. So the entire ecosystem is evolving, and it's evolving fairly quickly, and it's evolving countrywide. And that's where the opportunity really comes from. The product mix currently is fully tilted towards electricity. 95% plus is electricity, and a major chunk of that is bulk orders from the government. They hardly ever do too much of private, but the opportunity is there on both sides. There's early revenue that we're starting to see likely in FY26 from gas and water meters as well, and advanced metering solutions as well. So all of those will also start to contribute to the top line. I just want to quickly point out that Anushi and me were discussing in the morning in the newsroom that it's the order book size is 30,000 crore and the top line is just at 2,400 crore. The guidance for FY26 is 4,000 crore plus. Now, even with that, the kind of visibility of growth and demand is extremely strong, even at 4,000 or even at 5,000 crore, because it's a far cry from the 30,000 crore order book they're sitting on. Maybe some part of that is maintenance, but just the opportunity is that large, continues to be that large, and already sitting in orders booked is also large. And the possibilities of a default on these orders is very, very low because all of them are driven by the government. But let's quickly talk about the metrics. And the metrics, we'll stack it up, 8 of them: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and we'll have valuation as well as outlook within this, so that it gives you a lens into how to look at or what is it that the management is already guiding for. And thereafter we'll speak with management. So that'll give us a good perspective. Let me allow Anushi to start off with the income statement.
I think this is the most exciting part that we are looking at in these key metrics, because the kind of growth that the company has showcased in this last 3 years period, if we see. Now, revenue, CAGR, if you're just looking at 53% is what we are seeing, but EBITDA even more impressive at around 99%. And this is with margins escalating from 11% to 19% or odd. So the company now planning to maintain its margin at the levels of 18% or odd. So that's the sustainable range that it looks forward to. Net profit also we've seen about about 120% of a growth in this 3 years. And this is essentially a part of the order book that we are looking at just from FY22 to FY25. If we see the shift in terms of order book, what was a 1,080 crore earlier with about 2 times of a book-to-bill ratio has now significantly increased to about 12 times of a multiple that we are looking at. This is with almost a 30,000 crore order book that we've seen at the end of FY25. The main pickup that we've seen is from FY23 to FY24 from 4,000 crore to 21,000 crore. Just want to understand a bit more on this in detail as to what has led to the significant uptick in terms of order book. Is it with the GIC partnership that we are looking at, which has driven this orders, whether it's with the opportunities and the scale that we've seen in the last 2 years, but very interesting piece nonetheless to look at. In terms of key operational metrics also, if we see, the company sold about 9.44 million of meters in FY25. This is in comparison with about 4 million meters that it did sell in FY22. Even the cumulative meters installed has now increased to 99.5 million as compared to 81 million in FY24. And annual production capacity in FY25 reaching to the scale of 1.6 crore meters in comparison with about 1 crore which it had maintained in the last 3 fiscal years. So, Harsh, just to start off, very strong numbers that we are looking at in terms of income statement as well as the order book also, and the execution part of it would remain exciting for the business.
Well, yes, absolutely. But do they have the balance sheet to execute that? So let's pull up the balance sheet and get a better perspective. You're starting to see an inch up when it comes to 2-3 pieces in the balance sheet. The book value is currently standing at around 1,900 crore. That's trading at around 5 times book, by the way. So something to keep in mind. But outside of that, when you're looking at the way in which borrowing has gone up, you might be a bit concerned. But a large part of that is linked to inventory and receivables. And I'll showcase the way inventory and receivables have gone up. Inventory was at 280 crore in FY23. Currently sits at 850 crore at the end of FY25. Of course, maybe not Q1 FY26. Also, you look at trade receivables at 470 crore in FY23. Currently at, or rather at the end of FY25 was at 1,365 crore. We've seen 3x jumps in some of these numbers, and that's what's creating a drag on the balance sheet. And therefore, your liabilities is having to increase very, very sharply. because profit is not enough to fund some of these working capital requirements. So your borrowings have gone up sharply as a result. You're seeing the borrowing number at 1,365 crore, and then you also have a decent amount of cash in hand. So that's where you feel somewhere that it's well placed, because even after that increase in the borrowing, you're still seeing a debt to equity of around 1:2, so which is quite decent. And this could well unwind also fairly quickly. 800 crore of receivables could well unwind pretty much very, very quickly, maybe over the next year or two, and we'll understand that. And therefore, we for now have given it a thumbs up, but it's a wait and watch. Cash flow, Anushi.
Well, this is an important metric to look at now, considering what's happening with cash flow from operations. If you're looking at FY25 and or even FY24, we've seen a negative operating cash flow for this, and this is majorly a work of receivables that we are seeing. In fact, if you just look at the number of receivables that is there, that has picked up from a negative 113 crore to 822 crore as of FY25, and a lot of part is also tied to the net working capital which is there, which has also increased over the years. Again, we've already seen a substantial increase in terms of sales, but how cash is going to work out for the business is something that we should be seeing, considering that the management does expect that cash flow to be positive in FY27, but still this remains as a concern. In terms of the net cash flows also, if you look at that, stood at about 235 crore in the negative as of FY25 end. So very important to see how the upcoming years would shape up. Now there's a lot of pre-installation works which are currently going on in terms of the smart metering orders that the company has, which has resulted to higher investments as well. So a lot of areas, Harsh, that we are seeing in terms of cash flows if we are looking at.
Well, yes. There is some work to be done on this metric for sure. I believe management has acknowledged it already. So we won't delve too deep into this one any further. Let's talk about return ratios. And when you're seeing the return ratios, they've inched higher. And as that unwind happens with regard to cash flow and profitability, it likely will continue to inch higher. But we want to wait and watch for both cash flow to play out as well as profitability to play out. Return ratios likely to inch higher. Some capex guidance will help, of course. But till that working capital requirement doesn't shrink, you will see some way down on the ROC number due to the working capital, no other reason. And therefore, that will hold the key. We want to wait and watch for that one, and hence given this a neutral shareholding. Anushi.
We've given this one a neutral as well. Now, in terms of promoter stake, if we are looking at now, in the last 2 quarters, it has maintained at the levels of 39% or also from 43% that we'd seen in March 24. While FIIs, the stake has increased from 17% to 20% in this last 1 year period, while DIIs continue to hold about 4 to 5% stake in the company. It's the public shareholding which has also remained at the levels of 35 to 37% there. So, Harsh, no major or dramatic changes that we are seeing in the shareholding pattern of Genus Power, right?
Yeah, not really, and therefore we've given this a neutral. Right. It's sub 40%, but it's holding steady. Let's talk about the street cred. And when you look at the near-term performance, it's been choppy, but the longer-term performance has been stellar, as one would expect. Just given the numbers, it's been such phenomenal returns that this one has given to investors. Over the last 3 years, it's been a 4-bagger, and therefore extremely strong returns. What I would want to see, therefore, is can it sustain the kind of returns it's giving maybe over the next 2 to 3 years, and guidance will determine that, of course. But you want to talk about, let me also in fact take street coverage. Yeah. And just about very few analysts cover it, understandably sub 10,000 crore in market cap. 4 analysts cover it, 33% upside. Just out of caution that there are very few analysts that cover it, we've given this a neutral as well. We want to be conservative in some of the metrics we use. Valuations and outlook, Anushi, I'll leave that to you.
Well, for valuations and outlook, we've given this a thumbs up, given the kind of growth that we've seen in the income statement as well as other ratios. Now, if you just look at the P multiple, currently trading at around 26 times, and this is expected. The 2-year forward picture is around 18 times, which is quite similar to what its peer does, HPL Electric, which also has a similar vertical in the smart metering that we are looking at. So this one is a thumbs up, but it's the outlook which is interesting going forward. Now, if you look at the order book As of July end, that stood at 29,000 crore. FY25, we saw this figure at around 30,000 crore or so. But it's a tender pipeline of 27,000 to 28,000 crore, which is expected in the next 6 to 8 months, which continues to remain interesting considering that the company almost has a 25% of a market share. Even the revenue guidance of 4,000 crore, which showcases about a 64% of growth, is to be revised as per the management's commentary that we are looking at. And this is on the upside that we are seeing post the H1 con call that we'll see. This is with margins maintaining at 18%. So Harsh, interesting data set that we are looking in terms of the outlook as well.
Absolutely. So let's stack it all up and give it its KYC rating, and therefore, on the back of all of that, cash flow only being the possible concern here, and that will be the first question I ask Mr. Jitendra Kumar, who's joining us. But 5 out of 8 is what this one gets on the KYC rating. Mr. Jitendra Kumar Agarwal joining us. Mr. Agarwal, Joint MD at Genus Power. Sir, let me start off with that crucial question on cash flow. I do understand that you were listening to us for the last few minutes. Talk to us about how quickly can it unwind, and what will be that year in which we'll start to see that unwind happen?
So, hi, good morning.
Good morning, sir.
Just to give you a heads up on the business, that will give you a good idea why this cash flow is concerning everyone, which doesn't concern me at all. So this business is a smart metering business, which is a AMISP work, what we are doing currently. In AMISP, the arrangement what we have done with GIC, the platform what we have created, the Gemstar platform, is going to fund all these projects. How they initially, all the investment is to be done by the listed company, Genus Power, because the complete back-to-back all work is done by us. So initially when the project is started, we have to supply the meter, then we have to integrate the software with the billing system of the utility, and then the operation go live is received by the company. Only after that, you start receiving the payment from the utility, which in turn we get the complete capex payment from the Gemstar platform. This is the arrangement we have done. So since all the projects have started in last 12 to 18 months, you will see a lot of these projects are achieving operation go live. Few have achieved last month, a lot of them will achieve in next few months. So by the end of this financial year, we are more than confident we will be positive in the cash flow, and all these data, what you are seeing, all this investment in the inventory, what you are seeing, which is very high right now. In terms of numbers, it will go up, but in terms of percentage, you will see them going down significantly.
Mr. Agarwal, hi, this is Anushi joining as well. You know, you just spoke about that a lot of orders that are there currently, they're in the pre-operational phases, which requires this higher investment. But just on that, you know, want to understand, even if you look at the order pipeline, now that continues to remain on the higher side. So the expectation of more of these orders coming in. So considering that, wouldn't there be an issue with the cash flows going forward as well? Because now, currently you've guided for a reduction in terms of either net working capital days as well. But just want to piece this all together and understand your outlook on the same.
So if you will see last 6 months, number of days of net working capital has gone down. So this trend is very visible in the balance sheet. So you will see this considerably going down, and by the end of this financial year, we are pretty confident that we will be cash flow positive. And with more and more new orders coming in the next 6 months, you will see a lot of old orders reaching a very good operation go live stage, and they continuously, whenever we are supplying the meters, installing the meters, once operation go live is achieved, then your cash flow becomes much positive because we are getting paid capex by the platform. So the arrangement of Genus is very, very interesting arrangement, where we are initially investment is done by the listed company, and afterwards all the investment is done by the Gemstar, and the listed company achieves the complete payment for its all the meters being supplied, installed, and integrated with the billing system of the utility. That is why I'm more than confident that we will be cash flow positive by the end of financial year.
How much will unwind, sir, out of the net working capital that you're talking about? How much of that will unwind in FY26?
So in terms of, if you will see in the current stage, almost you will see in terms of loan and in terms of order, in terms of inventory, we have in debtors almost 800 to 900 crores are stuck, which you will see all this will get unwind in next 6 to 7 months. So that will make us very positive over the period of time.
Understood. And sir, talk to us about the split as well. So on the 30,000 crore order book that you have, 29,000 crore odd, what's the split between O&M and what's the split between product? Because O&M will probably stretch over a decade or so. Is that the right way to think of it?
Yes, 7 to 8 years.
Yes. And what's the split like, sir, on the 30,000 crore order book? How much is O&M and how much is product?
So just to give you an idea, so Genus is the only metering solution company which is also doing its own AMISP. We not only do our own projects, we also supply meters to almost all the leading AMISP in the country, and also we are the largest suppliers to all the utilities. It's not that the utilities have stopped buying meters. So to give you a clear idea of the breakup of this order, let's take a ballpark figure that Genus has an order book of 29,000 crores. Out of this 29,000 crores, 2,000 crores are supply orders, which we are supplying material to our AMISP partners, to our utilities. Export orders, all put together is around 2,000 crores. Remaining 27,000 crores is the AMISP business, which we get from the platform. So 27,000 crore order book is received by Genus. Then we transfer this order book to the platform created by Genus and GIC. And from the platform, 80% of that value comes back to the Genus as a EPC. So 27,000 crores is the order book that goes to the platform. Out of this 27,000 crores, 80% revenue comes to Genus Power, the listed company. And out of this 80%, 55 to 60% is supply and installation, which will happen in next 2 to 3 years, and remaining 40% is O&M, which will happen for 7 to 8 years. So this will give you a very fair idea how the revenue of Genus is going to look like in next 6 to 7 years. If we don't take any business from today onwards, this will be the minimum revenue that can be looked at in the current scenario.
So just a couple of questions from my side on the order book. Now, we are looking at a 12 times of a multiple, which was not the case scenario a couple of years back. We've seen a significant uptick in terms of order book, and this is essentially a play that we've started seeing from FY24 onwards. Just want to understand the kind of shift that has happened from FY23 to 24. And with the current bid opportunity also, the 27,000, almost a 27,000 crore of opportunity, want to understand from this, what is the kind of market share that you aim to have in terms of new orders for the business going forward? I believe the Tamil Nadu order is also due, which has about 3 crore meters installation plan as well. So just want to understand this aspect as well.
Just to give you a heads up on the industry, that almost 23 crore meters were sanctioned by the government of India under the RDSS scheme. Out of this 23 crore meters, 14 crore has already been ordered. So out of this 14 crore, 3.5 crore has been received by Genus. So you can say around a market share of 20-25%. So we are one of the largest in the industry. And further, on the new orders coming, there are 3 large projects, apart from some smaller projects also being quoted by Genus, but 3 large projects which are quoted by Genus is, one is Tamil Nadu, which you said around 3 crore meters. One is BRPL Delhi, which is around 30 lakh meters. And one is BYPL Delhi, which is around 25 lakh meters. So in total, if we talk of 3 large bids which we have quoted in last couple of months, has been around almost 3.5 crore meters. And if you take a ballpark figure of, let's say, 10,000 rupees per point, so it is around 35,000 crores of tenders which are quoted by Genus, and we expect them to get decided in next 2 to 3 months. So, and it is very difficult to put a number that how much Genus will win. Genus always bids to win. We have been maintaining our leadership position from last 20 years in the metering industry, and we are confident that we should be able to maintain that.
Got it. So I have just 2 minutes, so I'm going to quickly ask you a couple of questions. One is on the opportunity size. There is no doubt domestically, are you also tapping into foreign opportunities? And therefore, give us the 3 to 5 year view for your investor. Top line of 4,000 plus crore FY26, where does it go in the next year, next 3 years and maybe the next 5 years, in your opinion? And where should margins lie? Because your product mix is changing, and therefore, how should one look at the margin number as well?
So we have given a guidance of 4,000 crore for this financial year, and with a guidance of 18 to 19% of EBITDA, we are pretty confident that we'll cross both these numbers, and we'll give you a even more closer to the end of this calendar year. We'll give a different guidance if we see a different things happening in the next 3 to 4 months. but we are confident that we are definitely going to cross this guidance. In terms of international business, we are working in some of the very strategic markets, and you will see right now, I won't say it's a very meaningful turnover in terms of 4,000 crores. The export business is much, much smaller. But 3 to 5 years, you will see a much meaningful revenue from the export business. The kind of work we are doing currently, you will start seeing 6 to 8 months down the line, you will see a lot of positives happening in the international market. And we are pretty confident a very meaningful number will start coming in 3 to 5 years. In terms of company's growth in next 3 to 5 years, I can more confidently speak about the next 3 years. I definitely see Genus growing 30-40% year on year for next 2 to 3 years. Beyond that, I won't be in a position to speak right now. But yes, we have a lot of long-term plans, but yes, you will see them unfolding in next 3 months, 6 months, 12 months down the line.
Understood. Okay, sir. Thank you so much for coming in and speaking with us. This is great. And it's very good perspective that we get. Completely out of time on this edition of KYC. Thank you so much, viewers, for joining us. That's all, folks. Thanks for tuning in to KYC only on NDTV Profit, for your profit. Stay with us.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that.
Through unprecedented global challenges with resolve and vision. Under her leadership, GST has not only stabilized as one of the most transformative tax reforms in our history, but is now evolving into GST 2.0, a more simplified, technology-driven, and forward-looking framework that strengthens compliance, empowers business, and benefits consumers alike. It is only fitting then that she leads this special conversation, the Town Hall on Reforms for a Resurgent India. Ladies and gentlemen, please join me in extending a warm welcome to Honorable Finance Minister of India, Srimati Nirmala Sitharaman. She will be in conversation with NDTV's Editor-in-Chief and CEO, Rahul Kanwal.
Hello and welcome to the NDTV GST Conclave. It's now time for the moment you've all been waiting for. On the hot seat, ladies and gentlemen, arguably the second most popular person in our country right now. I say second only because I'm leaving the Prime Minister and her boss above her. Can we have a warm round of applause as we welcome to the NDTV GST Conclave, India's Finance Minister, Nirmala Sitharaman. Ma'am, welcome. This is the NDTV GST Conclave, and we've got people cutting across industry sectors and many of the Aam Aadmi itching and waiting. And I have a list of people waiting to ask you questions that extends beyond the number of chairs in this room. So thank you so much for taking out time. Industry, market watchers, economists, pundits, they all wait, Madam Finance Minister, for what is described as Big Bang reform. And that often seems an endless wait. And then suddenly, almost without adequate warning and quite unexpectedly, reform which seemed very difficult to deliver because consensus was extremely difficult to achieve is delivered. It's there on the plate. Everyone's celebrating. This is being called a second Deepavali, which is what the Prime Minister wanted as well. And people are wondering, how did we do it? Is it a crisis that prompts massive reform in a country like India, that's just when everybody rallies to try and deliver? It happened at the time of Dr. Manmohan Singh. It's happened now. Big bang reform, does it only get delivered when there are massive headwinds staring at us? Ma'am, welcome. That's your mic. And can we have a round of applause before the Finance Minister answers the question? Thank you.
Well, this one was in the making for almost 1.5 years. You had an election in between, and then soon after Prime Minister took charge for the third time, he did call me once and asked me if I'm working on GST. I said yes, I've started, and that was much before the last GST Council meeting, which was held in Rajasthan. And once again, I suppose, when we were preparing the budget this time, when the major announcement about income tax happened, even then he sort of once reminded me, saying, are you doing something on GST? Yes, I assured him even then. Then it was around May when I thought I had a worthy pack of reform measures that I could go to the PM and sort of brief him about it, saying this is what I have got as a major proposal, and the way in which it can work is that the center can give it as a proposal to the council itself. So that's how it happened. So it wasn't as if the crisis was on us because of the tariff measures, but this has been some time in the works.
Ma'am, the last time you delivered something which was quite as emphatic and brought India closer to global benchmarks is when you dramatically reduced the corporate tax rates in the country. And at that time, it didn't quite pan out the way you would have imagined for factors completely beyond your control. There was COVID, industry investment didn't quite take off in the way that you'd calculated. How confident are you that this time round, the estimates or the hope that you have with the reduction in GST rates will actually get passed on to consumers and lead to a virtuous cycle of consumption which ultimately spurs the growth rate of the Indian economy, madam?
I'm very confident. And I say this because I have complete trust on our industry and on our traders. Because I think people know, because after all, industry or traders themselves are consumers as well. So when they know that across the board, rates have been brought down, and I've said this several times before, the guiding principles were for me looking at those which are daily consumption items for all Indian citizens, particularly for the middle class and the poor people, and then that which is aspirational items for the middle class, looking at farmers for their inputs, MSMEs because they are going to have to drive this Indian economy. Already they are about 40% in the engineering sector and so on. So we have looked at all these, I've mentioned 4, the 5th being those which are very critical for the Indian economy at large. So these 5 filters were the one with which I looked at rate rationalization. So I'm of the impression that 140 crore Indians will have one or the other thing touching them from 22nd September, where they will see that the government's taxation reduction has come through. Government meaning the GST councils. So I'm very confident, because if it touches 140 crore people and it is not one section here, one section there, the persons who have got to pass the tax forward to the consumer are all consumers themselves in the first place. So it will have to get transferred.
At the NDTV GST conclave, we had the Finance Minister of Punjab, we had the Finance Minister of Jharkhand. They were engaging with ministers from the BJP ruled states, and their argument was that their apprehension is that this impacts the compensation that they get. And as was the argument when the GST reform was brought in the first instance, they're hoping that the government can do more than you've said at the moment in terms of ensuring that the revenue that accrues to the states does not go down on account of the reforms that you've brought?
You're right in a way, but I would like to rephrase what you've said, just so that there's clarity. The first thing I did after coming out of this very crucial council meeting was to thank every one of the ministers who came from various different parties, various different states and so on, because but for everybody consenting, this wouldn't have come.
Was it an acrimonious meeting, lots of dishum or not really?
No, not at all acrimonious. But of course there were rounds and rounds of putting everyone's views forward, and the council is quite used to that kind of a discussion going around in circles and not moving forward, but sometimes it does move forward. So that's one thing. But let's have some fundamental facts in our mind. The union's proposal going to this council was not opposed by anybody, and this they said even before coming to the GST Council. They said we are in favor of the rate rationalization. This is a people-friendly proposal. This will affect positively all citizens of the country. To be fair to them, they all agreed on that. And where is the difference then? The difference is when they started speaking about what if my revenues go down? Who's going to give a protection? That's where the differences lie. So let's understand, to be fair to everybody, they were in favor of the proposal. They wanted people to get the benefit of rate reduction. That is one. Second, I've told you the differences as regards. The third one is about the question or the way in which you put the question forward. They were worried about the compensation. There's no compensation now. From 2022, no compensation is there. The cess, in the name of compensation cess that is getting collected, is going to repay the loan that was taken during COVID. So compensation to the states has already stopped as of June 30th, 2022. So compensation loss is not the issue. Revenue coming down is the issue, on which difference of opinion prevailed. And in that, my view was, and also some of the commentators outside were suggesting that states' revenues will come down. I would like to do a correction using this platform. In the GST Council, all of us are there together. I'm not a donor and states are not donees. We are sitting there saying we'll have to collect the GST, and the better efficient collection results in good collection totally, and therefore all of us can benefit from it. But if the collections come down, all our efficiencies will have to be improved so that evasions are controlled and we actually collect everything that we need to collect. It's not as if the center is sitting there with a huge big suitcase next to me that I can give money if the GST is not efficient in its collection. I'm equally the person who's going, or the center is equally going to lose revenue if the states are losing revenue. So in general, my approach is this GST Council and the nature of the council will have to be understood by everybody. Center versus state is not the point. All of us are together in it, and if states lose, I also lose. All of us will have to devise a way to improve collection.
One of NDTV's most iconic shows was We the People, and the idea really is to get we the people to ask questions to those in power. So I'll turn this now into a town hall format. We've got many doyens of Indian industry. We've got lots of people across sectors here as well. And I'll start with Rajiv Memani, Chief of Ernst & Young in India, President this year of the CII, Confederation of Indian Industry. We'll get him to ask the first question. We've got many stars of Indian television and business journalism here. They'll be asking questions as well. Ma'am hasn't asked even once, what question will you ask me? And I have no idea what people are going to ask either. So do applaud the Finance Minister for that as well. Thank you, ma'am. Here, Rajiv ji.
Thank you very much, ma'am. Reduction in corporate tax rate, reduction in personal tax, modification of the new Income Tax Act, and this one probably the most transformational. So I do want, India today has got one of the most competitive tax regimes as compared to most countries which have similar economic activity. So on behalf of industry, first let me just thank you profusely for making this happen. I think this is really it really reposes the faith, as you rightly said, on industry, and also the trust that you have put in. And the beauty of this is, ma'am, at least the way I see it, is it's not just rate reduction, but the clarity with which you have bought 2 rates, the structural reforms that have been done, and the speed which it has come and the way you have rolled it out is
you
really
seem
fantastic.
quite surprised with the speed, Mr. Mani.
I think everyone is surprised, because this touches so many things. So I'm sure a lot of work would have done, because every one product rolls into the other product.
What else would you like to see happen with such speed?
No, so let me first finish. and ma'am, you've not. I have two questions before Rahul interrupts me or needles me. The first one is, you've not brought in the anti-profiteering clause, at least not till now. And you did mention that you have a lot of faith in industry. I would really want you to articulate, if you can, what you would want from industry. This is a great platform, and I think it'll be great to get your perspective on that. The second is, as compensation cess gradually phases out, did you want to time this around the fact that when compensation cess is also phasing out, so that at least the impact on states will be much lesser, because the amount of compensation cess that was being collected was not going to states. It was mainly center using that money to repay the loans. And to some extent, where the rates haven't moved back, that money will now be available for distribution to states as well. So I just wanted to ask you that question.
On the compensation, I want a bit of a clarity. Is it timed with the compensation? Yeah, somewhat. Are you timing it around the compensation cess? Yes and no. Yes, because June 30th, 2022, compensation collection for the purpose of compensating the states ended. It had to be extended because in 2020 and partly 21, we couldn't give the states the compensation because we couldn't collect enough revenue. We had to borrow, and in order to pay the borrowing back, we had to extend the collection. Now, at least in 2 GST council meetings earlier, we had already said that, first of all, extension was till 31st March 2026, by which time it was assessed that we would be able to repay the loan. Now, sometime 2 GST councils before Rajasthan itself, we had said GST collection for the sake of paying back loan would probably end even earlier than March 2026. Subsequent to Rajasthan, our assessment gave us the feeling that probably we'll end it this calendar year itself and not wait till 26. And therefore, if this calendar year we collect as much as we need to repay the loan, we had no business to collect it even one day after that. So we needed to get the clearance from the council that post repaying the cess, what do we do? Which means that is why you had a GOM looking at it, and also then the rate rationalization GOM was also working. To the limited purpose of decision on the compensation cess, the GOM on compensation cess decided, but what to do about the money which was collected in the name of cess? Would it be replowed? Would it be reapplied? All that was to become a part of the rate rationalization GOM. So that decision was put to the GOM looking at rate rationalization. So that is why it had to be timed somewhere to keep in mind that by the time the GST compensation cess comes to an end, we should know what happens to those items on which the cess was being levied. Therefore, we had to keep it somewhere closer to this date.
Okay, we'll take more questions. I've got Dr. Naresh Trehan here, one of India's most iconic, well-known doctors. Doc, Your question for the Finance Minister.
So first of all, Honorable Finance Minister, I can only echo a big thank for the public in accessing healthcare by your very bold move.
Thank you.
So the question basically is right now that we have benefited majorly from the GST on insurance premiums going, because that made it very expensive for people on top of what was already their cost. So affordability for insurance will definitely increase, and more people we are expecting to come in the insured net. Second, you have taken away the GST on life-saving drugs, and also generally on pharmaceuticals, there's been reduced from 12 to 18% to 5%. So this is a big help in the sense it will reduce our cost of acquisition, and then we should be able to pass it on to the patient and the families. The third thing is that it also helps us to create more hospitals and the employment that we do is about 5 to 6 persons or healthcare workers per bed that we create. We need 1.8 million more beds in the next 10 to 15 years for India. So it can essentially create jobs for 10 to 15 million people as we move forward. So all this will help us to move forward. What I can request for the future is in your GST reform 3.0 that we still don't get a set-off on the GST that we pay, unlike most other sectors. That has been a long-standing request to you that maybe you can look at it. You've already done enough, but maybe in a subsequent move, if we can get the set-off, it'll help us to even keep the cost under control. As it is, the cost of healthcare delivery in India, comparable to the rest of the world, or even better in some cases, is 1/10 to 1/5 of what the world can offer. So we are in good shape as far as our delivery system is concerned. Whatever help comes your way should be passed on to the public so that more and more people can access us. Thank you very much for this whole thing, and my request stays pending. Thank you.
Quite literally, Doc ka dil mange more.
Diagnostic equipments have also come down.
Yes, I didn't have every...
I understand.
Okay, so I've got Chandrajit Banerjee, Director General at CII. He'll ask the next question. I have a question for you, CB, as you ask your question to the Finance Minister, which is essentially this. The fact that when Madam Finance Minister made the big reduction in corporate taxation, one of the hopes you had and others had, what this would lead to a capex cycle, that investments would happen, and frankly, for various reasons which have been discussed ad nauseum, it didn't happen. How are you working with India Inc. and all the companies you constantly talk to towards ensuring what the Finance Minister has been saying constantly, that starting the 22nd of September itself, the entire benefit should be passed on? Because yes, prices are rising, there is inflation, input costs are going up. So how do you ensure that companies don't say a part of it needs to be offset against our own input prices, and therefore we can't pass it all on to the customer? So first respond to my question and then your question to the Finance Minister.
First, I will want to also join in congratulating the Honorable Finance Minister for GST 2.0, ma'am. Thank you very much. To respond to Rahul, ma'am, you know that industry has pledged, even in the panels preceding this important session, industry after industry, sectors after sectors were pledging that it would benefit the industry if they pass it on to the consumer. And as you also said a little while ago, that every industry is also a consumer. So we see that happening. We see that happening definitely, Rahul. And of course, institutions like ours will have to play a vital role in seeing that the benefits are passed down to the consumer. Ma'am, having said that, GST 2.0 is being celebrated. You also talked about how you did it. Easy it was, 8 years, and we have done it once again. You didn't talk about what difficulties you faced. And is it that there were no difficulties? What went on in those closed rooms?
Because we had a very acrimonious debate on the stage between the finance ministers, and yet so quickly on day one itself, you came out and said it's all done. There was that late evening press conference. There was talk in Delhi. I'm sure Mr. Banerjee and Rajiv and everybody heard that this could go over to a third day because initially the apprehension was that consensus would be difficult to find.
So something which is not yet in the public domain, ma'am, in terms of the difficulties and the navigations that you had to do to make this really happen, it wouldn't have been so easy.
No, I think to be fair to the finance ministers, they were all on board about the rate rationalization and the entire package which the union government gave. At no point in time there was acrimony. But certainly the states were repeating the argument, and some of them more than 2 times, let us say, about what happens when our revenue goes down. So once it was clear that all of us are on the same page about the proposal per se, there was no need on that score to talk anymore. But on the question of revenues going down, who's going to fill it all up and all that, I said I'm willing to sit the next day, because anyway, it was scheduled, the council meeting was scheduled for 2 days. But I think gradually people realized that citizens are waiting to hear that the council has come out saying, yes, we agree for the rate reduction. And issues of how revenue dipping should be taken care of are not that which the people are waiting for. I mean, this was not said in so many words, but it could be sensed in the House. So to be fair to the state's finance ministers, having said their piece more than once, even those states who thought this will result in a dip in their revenue, as much as I kept saying my revenue also would dip, I think they all saw the point and agreed.
Nobody wants to stand in the way of giving a benefit to the Aam Aadmi, and therefore...
That's right. So everyone came around. So
it's all about votes at the end. As much as it is about the economy, it's about votes. So there's a lot of talk, Madam Finance Minister, about whether this spurs consumption and whether it spurs just behaviorally consumers going out and buying more. So I've got Peruz Kambata, he runs Rasna. Does this get people to buy? You would naturally hope more Rasna, but do you have like a arithmetic conversion for this because of the reduction in GST across different categories? How do you see this impact India's consumption story, which over several quarters hasn't been quite as inspiring as the finance minister and everyone else would like it to be?
First, I would also like in thanking you, because what you have done for the food sector is unimaginable. You actually brought the whole food sector at 5%. And all the earlier issues of classification are gone with one stroke, and nobody was expecting. I was expecting lot P to be the 18, forget 40, everything is in the 5. And the direct benefit is not only to the consumer. Consumer obviously is going to benefit because we have pledged, I pledged in the earlier session, we are going to give more than the benefit. Because I'll tell you why we want to give.
How will you give more than the benefit?
Because as it is, we are always looking at giving better to the consumer in terms of values. And I do believe that this is going to have a ripple effect on the economy. Prices are going to come down. As it is, I am seeing some prices going down. So coupled with that and the fact that we also would like to rationalize our retail margins and the benefit of the taxes GST on the retail margins, if you calculate, it will be slightly better we will be able to give than what has come to us. So this is my personal belief. Having said that, I think the major benefit is not to that. The major benefit is to the farmer back, because we buy at a better price from the farmer gets a better price, and the farmer himself is the consumer. And the farmer consumes more the same product. So I think it's the whole circle which I want to see, and the best benefit will come in the agri and the food and the dairy sector. So I would like to thank you very much for the same.
What's your question, sir?
And as regards questions, my question is more towards the need for, I somehow believe that the thing now we have to move is into procedural issues. And I still believe that everything goes to a court. And I still believe that we need an alternate dispute ADR mechanism at the ground level. And why I'm saying it is important is you like it or not.
Reduce GST procedures.
Yes, I think now see, we always watch more. So I do believe that ADR and procedure is something, of course, this GST2 does take care of it to an extent, but I think this is something now when you have done so much for taxes, I want something to be more done on this. And one thing,
if you keep
on
questions shorter,
on ADR, we are talking of the old cases. That the old cases, legacy cases, if we can find a quicker samadhan, procedure ADR is my question, how will you do it?
Okay.
That's okay. I've heard.
She's saying this is good feedback in any case, and therefore now we have to see what we can do to try and reduce procedures.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
We'll take some questions from the NDTV team as well. I've got Vasudha Venugopal. She's the editor for politics at NDTV. She'll take the next question. Go for it, Vasudha.
Thank you, Rahul. Ma'am, I'm going to ask you a political question and about a state that we both come from, Tamil Nadu. You were in Tamil Nadu recently, and I want to understand from you, what are the prospects of the BJP-AIDMK alliance? And considering that there have been voices from the AIDMK, Sengotian specifically, do you see that impacting the prospects of the AIDMK-BJP alliance?
Well, post the Lok Sabha election, BJP has been very keen to get back its NDA alliance to strength. And therefore, every effort was made to get all the allies back. And there is one clear unanimity among all members of the NDA alliance, and to a large extent the people of Tamil Nadu, that DMK should not come back to power in 26. Why is that unanimity? Because of the extent to which things are going on in Tamil Nadu about not just the liquor policy, but also the drugs which have gotten into the society. Tamil Nadu has never seen this kind of a situation. And above all, it is also very clear that even the DMK is far removed from its own ideology. If you want to believe that its own ideology was social justice, which is what they normally say. We are building a society which is going to have social, equanimity. Everybody is going to be equal and people are not going to be treated up and down or higher or lower and so on. Tamil Nadu has seen one of the highest of honor killings. Villages which are dominated by scheduled castes, for instance, have had unbelievable crime. If I can tell you here that in one particular village where SCs are the majority, from the drinking water source from where they take their domestic, for use in their homes, that was polluted with human excreta. And the government has not even till today taken concrete action against those who have done that. Similarly, in another one village, I think it's called Kallakurchi, spurious liquor has killed women and adults in the village. You don't have one solid action. They may say, yeah, we filed an FIR, we've done this. But concrete action is missing. And similar to what happened in that RG Car college, medical hospital come college. Tamil Nadu, Anna University had a similar attack on a woman student. And it so happens that the culprit was so closely associated with the first family ruling Tamil Nadu. So today there is near unanimity among people, among political parties. You may be in an alliance or you may be out of it. Clear understanding that another 5 years for Tamil Nadu with DMK is going to make the state go backwards. So that unanimity among the NDA members is also recognized, and all of us have come together on that score. I don't want to comment on the internal disturbances or whatever you may call of the ADMK. I'm sure they will resolve it for themselves.
Okay, I'll go to Tamanna Inamdar. She's the managing editor at NDTV Profit, and she's tracking the stock markets very closely. So Tamanna, here you go.
Ma'am, since we've started with the queue of the stock markets, I think the big question right now is why are stock markets not responding maybe with full fervor as they should to the GST cuts? They have been larger than expected across more areas than expected. There are many theories, but I wanted to know if you had any thoughts on this. Because if you look at the triple whammy of good news, income tax cuts, 7.8% on GDP, take that those who say dead economy, and then you have these GST cuts. Markets should be cheering. Do you have any thoughts on this?
Well, I think markets always react to so many different other factors as well. The global uncertainty is definitely dominating, and therefore we'll have to see. But I thought today, for instance, the market has actually done well. So,
Does it play on your mind when you're at work or once you're at home? The way markets are responding and the impact you would expect your announcement would have on the stock market versus what's actually happening?
No, I do observe the market, but I don't think I can measure the reforms based on the performance of the market. I would want the reforms to go down well within the country with our citizens. Markets are within the country, no doubt, but I would rather have that gain ground. So I watch the markets, but I don't think I'm very worried about immediate reaction from the market on these.
Does it lift or sink your mood? Just I'm psychologically kind of wondering.
On market-related matters, Rahul, no question will get any better answer from me.
That's true. Okay. As I said, your level of if this was appraisal cycle in corporate India, ma'am would have like rockstar appraisals because the popularity in a 360 appraisal would be extremely high. So Akhilesh Sharma has the next question. Go for it, Akhilesh.
नमस्ते मैम, अभी हम जब बात कर रहे हैं तो उपराष्ट्रपति चुनाव के लिए वोटों की गिनती हो रही है और जैसे आप जानती हैं कि अभी तक भारत को कभी कोई महिला उपराष्ट्रपति नहीं मिली। एक दूसरा चुनाव है जो बीजेपी के अध्यक्ष का है, काफ़ी लंबे समय से पेंडिंग है। बीजेपी को भी अभी तक कोई महिला अध्यक्ष नहीं मिली है। क्या समय आ गया कि बीजेपी को कोई महिला अध्यक्ष मिले?
That's the trickiest question that's come. Yes, ma'am. Would you like to be the new BJP president?
Whoever becomes the president of BJP, all of us will work under her or him. We are happy with that.
Do you think it is time that the BJP have a woman president?
You know, I like the media which goes on asking about us. You know, is it time for BJP? Is it time for the BJP to do this, that? BJP was the first party to give 33% reservation in every one of its organization down to the Panchayat to up to the national executive. And I'm a beneficiary of it. I've come into the national executive of BJP because there was reservation for women. So on women, BJP is never behind. And for that matter, the reservation bill, women's reservation bill, being the first one in the new parliament, is also because of BJP.
You know, as we try and build out, ladies and gentlemen, a new NDTV, it's always good to look back at the past as well. And very interestingly, we have in the audience the former chief executive of NDTV, who happened to be here, madam, to moderate a session at another event which was taking place nearby. And because this was an NDTV event, Vikram Chandra couldn't help, and we invited him to come and just join us here. So Vikram, here you go. NDTV, the finance minister, your question next.
Thanks a lot, Rahul. It's interesting to be holding this mic after 7 years, but madam, it was great to get a chance to come here and talk to you. Big bang reforms in GST, ma'am, but of course when it comes to reform, dil mange more, and I know you're working on other next-gen reforms. So there's a lot of interest in what they are, which areas they will be covering, will it be deregulation, and will they also be big bang?
Well, I should also recall the number of times I've attended Vikram Chandra in NDTV, in his program during those days when I was spokesperson. I do recall that now before you. Well, on reforms, there's no point in me listing out anything at all. Prime Minister Modi is known for reforms. Even during COVID, he didn't sit back and say we should take care of the people, vaccination and things, forget the economy. No, even that time we came up with several reform steps. And therefore, reform is never off the agenda. PM is always there saying push more, get more reforms done. So there will be a lot more. And from my ministry, I will continue to do the work that we need to do, whether it is disinvestment, whether you're looking at land monetization, asset monetization, all that will go on. Yes, on the financial and non-financial regulator, as I announced in the budget, there are 4 committees now, one headed by the Home Minister, one headed by the Defense Minister, and 2 others, one headed by the Chief Cabinet Secretary and one by the former Cabinet Secretary. So there are a lot of activities happening now to get those streamlined and to push forward with reforms. There will be a lot more action.
Thank you for that, Finance Minister. There are folks from the hotel and restaurant industry, right? So I just want to take a question from the folks from the restaurant industry. And go ahead, please. Introduce yourself and then ask your question.
Namaskar, Minister. My name is Rahul Singh. I'm the trustee for NRAI, which stands for the National Restaurant Association of India. It's the organized sector for the restaurants. We do contribute 2% to the GDP and one of the largest employers in the country. Question I'll come to. Just hold on. Okay. So just bringing myself there, right? So first, we want to thank you because the Parantha debate is over, as we know. You know, that is a big debate, that Parantha should be taxed at whatever. No, I like both. Depends on the time of the day. The other is that, yes, we'll continue to employ a lot of people because AI can't, cook or serve for sure. So that's a good thing that we'll continue doing. There is only one request that we have, and it's kind of a question if it can be done that way. Our largest cost to our restaurant is actually 2 landlords. So one's the landlord, which is physical, which is the rent. The other is the Zomatos and the Swiggies, which are the digital landlords. And they charge us 18% tax, GST. We don't get an input tax for that. And we've not got input tax since 2017. So our request is, because that is more than the food cost, please do something about it. Make that part maybe 5%, at least when they charge us, because that's not being set off. And that, like Dr. Trehan said, that set off is important. So that's the request. The question is, we know constitutionally liquor for human consumption is a state subject, and you just mentioned the friction, the state, one nation, one price. Can we bring liquor for human consumption in GST?
Liquor for human consumption sounds deeper than it actually is. But yes, Madam Finance Minister, why don't you respond on the issue of alcohol and on the issue subsequently of petroleum products? But can liquor ever come under GST? That's the question.
That depends on the states. It's not for me to answer that. Liquor will have to depend on the states. I can't even comment on it. Yes, Rahul.
Okay. There's a gentleman from the Auto Dealers Association. They've got lots of pent-up inventory. So got deep discounts, pent-up industry, and he has a question also. So go on.
So, Madam Finance Minister, I'm Venkesh Gulati representing FADA, Federation of Automobile Dealer Association. So first, thank you. Compensation cess has been absolved or finished, and all the issues, legal compliances issues were major in dealers, which is over now. But it has created one more issue. So overall the GST, all the OEMs, like you know, Mahindra has already started giving the post-GST price from today, even before 22nd, Audi and Skoda also. So as from the auto industry, we commit, we'll pass on everything. But one major thing with this reform, which has created an issue with the automobile dealers, which are working at paper-thin 3% margin, is the cess input, what is still left in the GST and ledger. So from 22nd onward, whatever cess input is left for a dealer will not be able to adjust as per our information as of today. There has been questions on the evening.
The question. Yes, ma'am.
Yeah, so.
See, the only answer I can give at this stage is for you all to please look at the FAQs that we've put out for every sector. I think on the day we had the press meet, in fact, the media themselves were given about 75 pages as press release, because every question that a journalist might have in her or his mind can be answered. So over and above that, we put on the website FAQs addressing all the questions that might run in the minds of anybody who's a part of this GST. So I'm sure I would only refer to you at this moment to go back to the FAQs, see it. It has answers for every question.
You know, and while we do feel bad for automobile dealers because it's an awkward situation to be in, from the lens of the customer, it's not an unhappy situation, right? Because you've got deeper discounts than you ever will. And just linked to that, I think the executive director of Maruti Suzuki is here as well. So yes, go ahead and ask your question. And the question of passing on the benefits to the customer and your question to the finance minister. Go on. Okay.
Ma'am, honestly, you've done so much that it's now our time to respond. Obviously, it's a religion at Maruti, and I think our peer group within industry to pass on 100%. There is absolutely no doubt that a single paisa should be retained by the manufacturer. It's a gift from the government to the consumer of India. It's the consumer's day, should be passed on. Thanks. Of course, now it is for industry to respond. And in fact, we are now worried about investments. We might have to accelerate our capex cycle because the demand surge that might come, we want to be on the right side of the consumer and start producing.
Are you feeling a demand surge?
Yeah, in fact, we know the pulse of the customer. So we certainly will have a demand surge. The projection that we have given out is, for example, small cars had some structural issues. They were declining at about 6% per annum. From a -6, we think a swing to +10% growth. That is our initial projection. We may be surprised positively, we don't know. But certainly we are accelerating our new plants and investments in anticipation of more demand. And,
okay. Ma'am, now there are two things. One, of course, the fact that you'd want the companies like Maruti, the Mahindras, etc., to spend more on building capacities here. Then the fear that part of this production was meant for exports. And it comes back to that point that till the time the uncertainty around tariffs settles, they're sinking in this infrastructure spend without knowing fully whether they'll be able to export in a competitive fashion or not. So there is that, I mean, there's nothing you can do about it, but there is that factor which also plays its out simultaneously.
That may be so, but I quite appreciate Maruti's commitment to transfer or pass on the tax reduction to their consumer. And that is the spirit which I think the people of India are also expecting, because eventually you asked Maruti the question that do you see a surge? I'll give you one input from my side. Much before, once the GST, Union government's proposal, rate reduction were all now coming out in trickles, much before the GST Council met, so many industries called up to say, hey, would you please take this call sooner? Because those people who come to us are no longer ready to place an order. They're saying likely there is a reduction, so we shall wait. So you're also getting a situation from the other side saying surge, but before that they held back. So obviously a surge.
हमने भी wait किया है. I think lots of people here, I don't know if anybody is planning to buy a car, but many people decided to wait कि देख लेते हैं मैम क्या करती है फिर decide करते हैं. So can I just take some more questions from people? Ma'am, I have, in the economic survey, the chief economic advisor spoke about relooking investments from China. Now, given that the Prime Minister went there was a good meeting with Chinese President Xi Jinping, how do you as Finance Minister view the contentious issue of investment coming from China, the sectors where you currently have guardrails, and given what we're seeing with the United States and the slight thaw that we're seeing with Beijing, how do you see this play out in the weeks and months to come?
Well, I think it's important. We will have to be negotiating for greater market access to Indian products in China, if at all there is a trade talk. About investment, the PN3 guides us, the press note 3 guides us. It's also true that we very clearly said investments from neighborhood we are not entertaining, particularly during and immediately after the Galvan crisis. But the PN3 has also been made a bit flexible as regards domain experts, technicians who will have to come to complete projects which are already in the ground. Now, if projects are already on the ground and they're not getting completed because experts were not available, we had to that extent, allow experts to come. As regards investments, which is your specific question, are we flexing it? Are we making it easier? I think the concerned departments will have to talk about it and then come back to take a call on it.
Are you less wary than you were earlier, just philosophically and ideologically?
No, I would continue to be cautious.
Interesting. Vishnu Shom has a question for you. Vishnu.
That's not to deter any decision in favor.
No,
caution is a word.
Of course, absolutely.
Ma'am, I had the opportunity of meeting the Chinese ambassador yesterday. He spoke to a few journalists. And he's called for a fair, equitable business environment in India. We're in the midst of a reset in ties with China. I don't know if the word reset is accurate or not. Some suggest that it may be. Do you believe that, do you welcome greater Chinese involvement in our economy? And what about rare earths, which is found mention? Is that not critical for us to achieve our economic goals?
No, it is absolutely critical to achieve our economic goals, no doubt. And I would want to have trading relationship with every country, investments to be attracted from any country, no doubt. But I'm just getting into the detail. If you ask me one step more, get into the granular detail. These are my thoughts. I need greater market access as much as opening up my market for you, for anybody, for any country. In a way, isn't that the question of what negotiations with the US, with the EU is all about? Give us greater access and trade surplus. There are many countries which have trade surplus as against vis-a-vis United States. So we also have a huge deficit against China. So when you put India's interest on the top, there are aspects which have to be said and negotiated on. That's the point I'd like to highlight.
Okay, I said we'll give some of the leading voices of India Inc. an opportunity. I also want to move back and give some folks sitting towards the seats at the back the opportunity. Go on, please.
Firstly, ma'am, I'll take the opportunity to join all the senior dignitaries in thanking you for bringing us an early Diwali gift this year in the form of 2.0. The question is very quick. I'm personally a startup founder. I have benefited from the startup benefits that the government has prevailed personally because I have created a product company out of AI. But my question is very short and simple. Today's youth in India is now aspiring to make the tech giants now come out of India. And whilst there's a lot that we've already received in the 2.0, compliance is something where it's slightly on the heavier side. And with total number of startups that are coming up, and startup founders are always working on the thinnest of margins. Is there something that we can expect in the coming times where towards the compliances and services side also the regimes can get slightly more compressed so that we can probably think of not using foreign AIs and creating our own chat GPTs in India itself in the coming times to come?
When you say compliance, I don't know what you're referring to, because as many compliance-related issues that may pertain to me, central government, we are actively engaged with the stakeholders to say, tell us where you want to remove something, we are willing. Hasn't the last 2 terms of Prime Minister Modi seen so many archaic acts being removed, compliance conditions being removed? We are always on course for it. But the problem sometimes is, I'm not shifting the blame, startups are located somewhere in some state, because union government doesn't have its territory except for union territories which are known. But if the compliance pertains to a state regulation or a state law, that is for the respective states to deal with. That burdens you equally, I accept that point. But even states will have to take up this thing about making it easy for startups. We are still ready. As many as the issues that you'll draw to my attention, I will work on them. That will continue.
Ma'am, there was a question that somebody sent on social media. I want to ask you this. This is to do with real money gaming. The government brought a new law which bans real money gaming. And the question is on behavior. And we had the same question for you when you did the same with cryptocurrency. The government comes with an iron fist and comes out with a law. It doesn't really change youth behavior. A lot of those who are buying cryptocurrencies in India move some of those investments abroad through VPN. They still continue to trade. And a lot of the Web 3.0 companies feel they're having to move to Dubai, move elsewhere, but they're still trying to do the same thing. And a lot of that money is coming from India. The concern around real money gaming is the same, that while and there's a moral reason why you've done what you have, but it doesn't change behavior. And therefore, instead of Indian startup founders benefiting from the surge in real money gaming, the benefit just gets exported to somebody in some other geography who's making the same money with the people who are based out of India. How do you look at this argument?
So it's for us, Rahul, to say we encourage money gaming at any cost. And even if citizens are calling up the PMO, sending emails to many of us, SMSs, WhatsApps, to saying my family is getting ruined, does the government care or not? And that is why, whether you recall my conversations on crypto, which you are doing now, or whether this one, we are not against the technology. We are not against the technology which builds up these games. That is why entertainment related games, online gaming, all that is fine. But when money is involved and betting comes into the place, or people are bidding money for greater game purposes, many families have lost their monies. And many middle class families are saying, what's happening? Our children are playing it thinking it's free, and it is temptingly free to enter, and after that you are unknowingly walking into a payments scheme of things. Families have really become very agitated and wanted government to take an action. We reflect the people's opinion. Money gamings are going outside of the country. Well, we are not against the technology or bringing in entertainment through digital games. But gambling or bidding for games through online is worrisome. And it's not just Government of India. Many states have already banned it. Why have they done it? So I think we'll have to draw some fine line somewhere.
Madam Finance Minister, we are out of time. This just so happens to have been my first broadcast at NDTV. And we're thinking about finding a special opportunity to come and do this first broadcast. I don't think we could have done anything more special. So on behalf of the NDTV team and on behalf of everyone who's joined us here, can we have a very warm round of applause for Union Finance Minister Nirmala Sitharaman for coming into this setting and for taking questions from we the people and from all of us, all of you who came here today to join this town hall. Thank you so much for taking our time. Thank you, Madam Finance Minister, wish you a happy Diwali, a double Diwali, and before that, happy Navratras, and thank you for making it so special for everyone. Thank you, ma'am.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Good evening, I'm Vikram Oza, and this for the first time on NDTV Profit. This show is The Big Question. And this evening, the headline that's got everyone talking about, Prime Minister Narendra Modi having said that he'll be speaking to the American President, Donald Trump, he's going to do this soon, and that the two sides will try to wrap up their trade negotiations at the earliest. This is happening after weeks of high drama, especially after Trump slapped 50% tariffs on a slew of Indian exports, citing Russian oil imports. And India, on its part, has stood firm on protecting sectors like agriculture and dairy, marking them as red lines. Now, the US president has had what it may seem as another change of heart. He says there should be no difficulty in closing a deal. And Prime Minister Modi, who has not directly responded to what many would classify as Trump tantrums on those tariffs, that hasn't happened in the recent past, but now Prime Minister Modi is striking a positive note on the back of Trump's conciliatory statement. The Prime Minister is calling India and the US close friends and natural partners with limitless potential. And that brings us to the big question. Beyond these warm words, beyond all that rhetoric, what does this thaw, if it is that, what does it really mean? Can Modi and Trump reset the trade equation that had gone seemingly out of whack? To unpack this, I'm joined tonight by the former Indian ambassador to the WTO, Jayant Dasgupta, is joining us. Along with him, we have David Roche, strategist at Quantum Strategy. And also with us is the former ambassador Ajay Malhotra. Gentlemen, thank you for making the time. But before I come to this discussion, let's just listen in to what we got from the finance minister first. Nirmala Sitharaman was in conversation with us at the NDTV Profit GST conclave in Delhi. That took place only yesterday, and we quizzed her over there about the possibility of a trade deal with the US amidst all the tariff tensions. This is what she told us.
From our side, we are keeping all the doors open, if I can use that expression. The diplomatic teams are engaging with the US. The trade negotiations can still go on. So we don't, from our side, we are not making anything difficult for others, one. And second, FDI has also come through various other routes. They come through investment, wealth funds, sovereign wealth funds. They also come through various other destinations from where funds are managed. So I'm not saying this is not going to have a bearing. It will have a bearing, but we are trying to offset it. We are not engaging with other countries, other FDI sources. So work is on. I can assure that much.
Work is on, so says the finance minister in conversation with us at the NDTV Profit GST conclave only yesterday. And gentlemen, you heard her. And also we've heard the Prime Minister speak about this. He's spoken directly to President Trump to conclude these trade talks at the earliest. Now, that is the kind of language that is being used, at the earliest. And Trump, too, has said that a deal should pose no difficulty. Now, that's quite a shift after weeks of tariff tensions that have rattled businesses and markets. The big question is, are we moving towards resolution now, or simply entering another round of negotiations? Let's just pose this to my guest. What has been a really tough ride as far as striking this trade deal is concerned, Mr. Dasgupta. From your perspective, your experience on trade deals, what's actually on the table this time around? Is there a tariff rollback? Is Russian oil still on the table? Digital services, market access? What is actually negotiable now, according to you?
It's very difficult to predict anything about President Trump. Today he's blowing hot, tomorrow he's blowing cold. So I wouldn't hazard a guess about what is on the table and what is not. He has repeatedly mentioned that India has offered near zero duty tariffs, but he has left unsaid as to what India's demands have been of the US, because it is supposed to be a bilateral trade deal. And from some early reports which had emanated about the negotiations, I think the Indian side had definitely raised this issue that the tariffs in areas that they were interested in should be lowered below pre-Trump levels. That is, the December 2024 levels, below that level. And that would be a kind of a quid pro quo. Now, the problem with President Trump's administration at the moment is that he doesn't have a congressional authority for a fast-track trade deal. So in the absence of this, he is not in a position at all to reduce the tariffs on any item.
But are you saying that a fast-track deal is something that Mr. Trump may actually want? Let me take that across to Mr. Malhotra.
I don't think anyone would know that at this moment in time. He's been blowing hot and blowing cold. But certainly his latest comment is a good development and is a welcome development from our viewpoint. There is much to be negotiated still, as I can see it. We did start the negotiations early between India and USA, but the deal is done only when it is done in all its aspects and it comes into the public purview. Till then, I think everything is open. There may be pressures and counter pressures from both sides.
Yes.
There are lobbies in both countries. And I think this process will take a little more time. I don't see it happening tomorrow morning, but yes, it's moving in the right direction finally. And we call ourselves comprehensive global strategic partners. In that context, it was very strange to see punitive sanctions being levied on India.
Yes.
There was no basis for those sanctions. And now at least one hopes that the negotiators will be allowed to sit down and work out solutions which are mutually advantageous.
But
and
those
acceptable
punitive
to both sides.
sanctions, those are going to stay, right? At this point in time, do you see a rollback to be able to create that sense of fair dialogue?
I would expect them to be rolled back when the deal is revealed. If we are continuing with 50% sanctions, 50% tariffs, it makes absolutely no sense for us to even consider anything that the Americans are offering.
Right.
So even 25% is far too high if you look at what our neighbors and other competitors in various sectors are getting between 19 to 20, 21, 22. Even 25% is too high. So if it has to be of interest to India, it should come down a little more. But 50%, not a chance. We should not accept anything which keeps these punitive sanctions in place. I think that should be part of our negotiating position.
Do we have that negotiating position?
What is part of this?
It's an important piece to ask whether we have that negotiating clout, considering what has happened in the recent past. Mr. Dasgupta, where do you think India is placed at the negotiating table right now when we see these resumption of trade talks?
Well, there are two things which have become very clear over the past month or so. One is that India is prepared to grind it out. If it is causing distress to many of the labor-intensive sectors and in general to about 55% of its exports to the US, it is prepared to face it. But it will not get bullied. It will not give up its sovereign right to exercise strategic autonomy. And three, it will not lift its red lines from agriculture and dairy products which it wants to protect. So that is there. Now, whether it gets anything in return or not, because, getting slapped with even 25% or 20% tariffs is not getting anything in return. It is just succumbing to a bully. So that point will remain, I think, hanging in the air as to whether the US has anything to offer. The last point I wanted to mention is that the Supreme Court, I think, is now seized of the matter in the US,
Yes.
and it may give a ruling. So President Trump may have been, I think, been pushed by not only the critics in the US who are saying that you are losing a very good friend
Yes.
and a trustworthy ally.
Yes.
And the second point is, if the Supreme Court rules against President Trump, I think that would be a big setback to the entire tariff efforts or actions that he has taken.
So why-
And then he can't get anything from India.
Yes, so why the tonality has changed, that is, of course, a moot question to ask. And you're saying that it could be the court's decision about these tariffs and the way that the Trump administration has gone about putting them in place. Now, that might get overturned, and which is perhaps why we owe this entire push towards a trade deal once again. David Roche, do you agree from a global investor lens? These talks, are they really about tariffs, or is this also about some reassurance to the markets that neither side wants escalation?
Well, Trump at the moment sees the markets are going up no matter what he does. So I don't think he feels constrained by the markets at the moment, even though the markets are in a very dangerous place.
Yes.
There are a couple of factors I would bring in here. Number one is it is completely correct to say that the only constant thing we know is that Trump is unpredictable. So a little while ago, India was goodbye India, taken over by the deepest, darkest China. Now India, great nation, America, great nation, about to do a deal. There is no common reality in this sort of splurging of remarks. I think I would say this. Number one, whatever Trump negotiates with India is subject to the Supreme Court ruling, which actually, if it rules against the use of tariffs under the emergency powers designated by the IEEPA, if it rules against those, 71% of all the so-called handshake agreements that Trump has done are over. They're invalid, and you go back to zero. And I doubt very much that where politics has moved since he started bullying other nations, whether you could ever negotiate those deals again. So the first thing I would say about India is that actually he can't negotiate a quick deal because we don't know tomorrow if he's going to have the authority to negotiate any deal. Number one point.
Yes.
So don't expect speed. Number 2 point, somebody has probably told him that pushing around India hasn't worked for 30 years. India has its own trajectory, its own navigation. And that pushing it around actually deprives the US of a major source of geopolitical power within its global outreach. So maybe somebody's managed to explain that to him. So I think that is one of the reasons why he's coming back to try and negotiate the tariffs. Number 3, I can see absolutely no way in which this regime will not do anything but what it has done already. It will try and bully countries into signing dreadful trade deals in return for money, which it hopes will fill the coffers of the state and prevent a debt crisis in the United States. So actually, it cannot reduce tariffs. It can reduce them below the ridiculous 50%, but don't think they're going to go below Japan's. So it's very limited. And number 4,
yes,
I would say India is a proud nation which has set its red lines. And actually, this is not about economics. It's about pride. And Trump doesn't understand that. Everything is about money. He does not understand national pride. And there he has got India completely wrong.
But David Roche, I also have to say that this unpredictability is something that the markets don't like, and that's exactly what Trump serves. Investors are quick to react to headlines. Do you sense that markets are taking this as some kind of genuine thaw, or do you think it's just a signal to stay calm, at least as of now?
Look, there are a lot of things going on in the markets which markets should be worried about. For instance, we had an outright intrusion of Russian drones into NATO airspace last night, and the market is up. So, I mean, if you take everything across the board, from the Fed, the attacks by the U.S. administration on the independence of the Fed, you take what's going on in tariffs, you take what's happening on the geopolitical front, the market should be 20 or 30% lower. They're not. Why? Because they think the Fed is going to go on printing money. I'm sorry to tell you that I don't think India plays a great role in this. It plays a role in Indian markets, but not at the moment in global markets, because global markets are a bubble driven by just one thing, the amount of money which Trump thinks he can get the Fed to print. And it looks like it's going to be a lot.
So this means more trouble coming in the way of the markets and for investors. This kind of uncertainty is something that the markets may not be able to handle too well, which we've seen in the recent past as well. But talking about this entire negotiation that is likely to unfold now, Mr. Das Gupta, in terms of India's position, because it is difficult to play against the Trump administration when they have imposed the kind of tariffs they have. So whether it means giving concessions or holding strongly on those red lines, whether it's dairy or agriculture, whether it's digital trade or pharma pricing, how realistically can India and the US resolve some of those sticky issues and move? How is India positioned, according to you right now, to take these on?
Well, as far as pharmaceuticals is concerned, I think President Trump himself has realized, after having said that, all major pharmaceutical companies have to set up a manufacturing base in the US. Otherwise, he will slap 200% tariffs from May or June to 2026 or something he had mentioned. Now, he realizes that inflation has already started rearing its head in the US. Employment figures are, not exactly very encouraging. In fact, the employment generation has gone down quite a bit. So these are telltale warning signs that the US economy is now starting to feel the pinch of the Trump actions, and that everything is not rosy in the garden. So if he is listening to anybody, any economist who has his ears to the ground, he would realize that this can't go on for very long. So I think pharma, he is not going to raise the tariffs. He's realized that that is a no-go area. In terms of mobile phones and a few other electronic items, I think he realizes that that would put a very large chunk of the US population, which are very, strong users of these, aids, they would feel bad about it, and there would be a backlash. So I think in the end, it is what India is prepared to give. If India, as President Trump has said, has offered near zero duty access, whether it will hold on to that or it will put some new ifs, that let us see what the Supreme Court rules. And the other point is, India may now start saying that, all right, what is it that you are going to give us in return? So first mention it, and I know that we know that you don't have a trade promotion authority from Congress to lower your tariffs, but what is it that you're going to give us?
Well, already,
so that is a very legitimate question.
Yes, certainly. And we heard the finance minister also kind of holding ground, saying that there will be other trade deals to be struck. India is pursuing them. FDI can come from various other places as well in several other sectors. When you talk about the energy purchases from Russia, Mr. Malhotra, India has kind of maintained its line, something Washington has strongly objected to, and that's why the punitive kind of levies that we are seeing. But do you see this becoming a real sticking point in negotiations? Because they have been in the past. Now, what are the chances that India is going to step back this time around if the US makes it a big deal?
Well, it is unclear at the moment, but I think, as both the previous speakers have pointed out, India is a very proud country, and I don't see us succumbing to this sort of, unseemly pressure from anyone. And if you see also, have they imposed sanctions on any other countries for buying oil from Russia? And what all are they doing in other sectors? Look at the uranium imports, for example, from Russia. These are huge. And will they impose sanctions on themselves? I mean, is that the ridiculous path we'll be going down? So even if you look at oil and gas, they've only put a cap on the price till now. And when the EU suggested a lower cap, the Americans obviously didn't want to join in because they have their own oil production facilities which will get affected. I mean, they do fracking and they can extract oil at a particular level at so many dollars per barrel. And if it goes below that, they can't. So they have also their own interests. Everyone has considerations of their own. So this is more a attempt to pressurize India. And if they find a solution with Russia going ahead on Ukraine, well, you never know. All of this will then fade away. So I don't see this as something that they can press beyond a point.
So these pressure tactics have not worked as such, if you are to believe. But this is at the start of the restart of trade negotiations. At this time, we can say that. But if tariffs were to ease even slightly, David Roche, this question to you. What sort of market reaction would you expect in equities and even flows into India?
I don't think there'd be an awful lot of change because I think the market assumption really is that this level of tariffs is unsustainable and that the party which is going to have to take them down is the party that put them on in the first place. So it's got to be the US. And I think the ability of the US, the readiness of the US to think differently about these tariffs in geopolitical terms of its relationship to India rather than in mercantile terms of how much it contributes to the state coffers. I think the American, I don't believe that Trump has suddenly had an awakening and that he now understands the damage he's doing to his economy by pursuing these policies. So I would expect the market reaction to be quite mild. And the reason the market reaction will be quite mild, because I think any ratcheting down of pressure between the US and India will be at the margin, quite small. And I don't think that it will change the fact that India is now going to pursue a course which will lessen its dependence in all respects on the United States and increase the role it plays in entities such as the SCO, the Global South, and its relationship to China.
Yeah. So meanwhile, those kind of discussions are still on the table as far as China, the entire thing that happened with Russia and China, with India, all of that is still in play. But of course, those could be dismissed as optics at this stage. But if you take a step back, Mr. Dasgupta, the broader vision, like the Mission 500 target of $500 billion in bilateral trade by 2030, A realistic framework, you'd say, or more of a long-term aspiration still, with immediate disputes playing out in the interim?
Well, 2030 is not that far away.
Yes.
And if there is this kind of huge uncertainty because of President Trump, I don't think people would, like to invest in this relationship or in increasing the trade flows, etc. So India has already started looking around for alternatives in a very constructive way. And as Mr. Roche has mentioned, it is not likely to get back to normal very soon, because President Trump is not a person who acknowledges, if you read his Art of the Deal, he says that even if you have made a mistake, never concede it. And carry on as if, it is a victory. So never concede defeat. So I don't know really what is there on his mind. But things will, I don't think this relationship on the trade front will go back to normal in the short term of, let's say, the next 3-4 months. But by spring, I think the macroeconomic pressures on the US economy in terms of the standoff with the Fed, in terms of, as Mr. Roche has pointed out,
yes,
the inflationary impact because of huge printing of dollar notes, so all these things are going to have a large impact, and it will have a bearing on the November 26 midterm elections in the US, and there would be a backlash.
There's no doubt about that. So, keeping that, all of what Mr. Dasgupta is saying in mind, David Roche, I want to ask you the final question. Who needs this deal more? Who needs this deal more right now? Is it India or the US? This trade deal, which has been long in the works, which has seen so many hurdles so far. We are seeing resumption, but who needs it now more than ever?
Oh, I think Trump does. I think what the ambassador said is quite right. I think Trump's economics, Trump's extremism are like stretching a piece of elastic. You can get away with it so far for 6, 7, 8 months, but it's running out and it's going to snap back. A whole lot of things are going to start going wrong, and you're approaching the midterm elections where the things that go wrong will get their expression. The primary thing will be living standards for people, workers, and it will be unemployment. They're the big things. So I think, therefore, Trump, he is a politician after all, is telling him, look, you better start accumulating some brownie points or your regime is going to be in trouble. And therefore, I think Trump needs the deal. And you know what? I don't think India is going to give it to him.
You're saying that Trump needs this. He wants to be a deal maker, not the tariff man that he has been with India.
Well, he wants to be the man who knows how to make deals and settle wars through strength. It's kind of almost like a cartoon-like character out of a rather bad version of Walt Disney. And of course, none of it is true. But what is going to happen is it's going to be proven untrue within the next year. And somebody is telling him, you better change trajectory. So he is changing the trajectory, but he is not going to get the successes and the deals from India that he's looking to actually be something in support of that newfound success of his. I don't think so.
And in the meantime,
he needs the deal. India can pass it by. It'll survive fine, but it's tough. But it'll survive. Trump cannot.
And the markets in the meantime, are they going to be steady or shaky in the near term, considering what could happen or may not happen?
Look, I think the markets are staffed by extremely simple people. With all due respect, if the central bank is printing money and there's nowhere for it to go except into asset prices, then the markets will either stay where they are or go up.
Right.
That doesn't mean that fundamentally they're right or that things are good. It's just what's going to happen. So I say stability or up, but not healthy.
Well, tonight what we are hearing is there is extreme skepticism as far as Trump is concerned. His unpredictability, of course, is the bigger headline. The intent, some would say, is positive. The words seem to be warm, but the details, they remain to be negotiated, and there are so many details to be negotiated. For India, of course, that means balancing strategic red lines with pragmatic trade-offs. And for markets, it means staying alert, not panicking, staying alert. The road ahead may not be easy, but the willingness to talk at the very top is in itself a step forward, one would say. My sincere thanks to Jayant Dasgupta, David Roche, and Ajay Malhotra for joining us with their insights, and to you for watching The Big Question with us on NDTV Profit. I'm Vikram Oza. Good evening. To keep it with us.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
You're watching Market Express and I'm Sanjana. Let's get straight into the show. The Nifty managed to breach 25,000 and notched a fifth straight day of gain on continued optimism over GST rate cuts, hopes of a trade deal between India and the US. The Sensex jumped over 300 points. Advance decline ratio at close tilted in favor of advances. Broad-based gains were seen across sectors of IT, with the stocks leading the charge for the second day in the row. Defense players notched gains on back of major order wins. Auto media shut shop in the red. Oracle Financial Services software shares surged 10%, the biggest gain since 13 June 2024. Trading volume hit 18 times the 20-day average. The buzz stems from parent Oracle Corporation's bullish outlook as they reported a massive $455 billion in new bookings driven by 4 multi-billion-dollar deals. These include a commitment with OpenAI plus deals with TikTok and NVIDIA. Oracle projects 77 cloud infrastructure revenue growth this year, reaching $144 billion in 4 to 5 years. The US FDA inspected Sun Pharmaceuticals' Halol facility in Gujarat from June 2, 2025 and classified the facility as Official Action Indicated, OAI, signaling non-compliance with good manufacturing practices. Now, this plant is already under an import alert blocking shipments to the US until compliance is achieved. Sun Pharma faces no immediate changes to financial estimates as the import alert was pre-existing. The OAI status highlights ongoing regulatory challenges for the facility. Sun Pharma must address these issues to restore compliance and resume exports to the US market. Cartrade Tech stock fell 10% after JM Financials downgraded it to sell with a target price of 2,350. The stock's high valuation at 43x in FY27 EBITDA is risky due to its reliance on cyclical B2B revenue. GST cuts may not linearly boost revenue and OLX recovery hasn't improved forecasts. Emerging AI tools like ChatGPT pose a threat to traditional search, adding risk. Despite strong Q1 results, concerns over valuation persist. Seafood stocks like Avanti Feeds, Coastal Corporation and Apex Frozen surged after the EU approved 102 new Indian fishery units for export. This move boosts India's seafood exports by 20%, vital amid America's 50% tariffs. The approval signals trust in India's food safety standards and supports ongoing India-EU trade talks. The EU is India's second largest seafood market, and the decision is set to create jobs and boost foreign exchange. Logistics stocks in India plummeted by up to 50% over the past year. Policy uncertainty, including delays in reforms, hit investor confidence. Companies like All Cargo Logistics and TCI Express faced market share losses to competitors. Yield and margin pressures squeezed profits as costs rose. Softening demand and global economic headwinds like trade disruptions further dragged performance. Despite growth potential, these challenges sparked a sharp sell-off. JP Morgan sees opportunities in capital goods despite a slowdown. Capital expenditure growth is expected at 10 to 11% in the medium term. Stock prices reflect the slower pace, but some firms offer strong earnings potential. JP Morgan favors L&T, CG Power, Cummins and Thermax for growth and visibility. Trading multiples are now more attractive. However, Siemens and BHEL received underweight ratings. Goldman Sachs maintains a neutral rating on Amber, raising its target price to 7,330. Amber's PCB manufacturing could drive 12% of revenue by FY30. The company may double its share in India's PCB market. Export growth, however, will likely remain limited. HSBC maintains a buy rating on Aster DM with a target price of 680. The merger with QCIL is set to close by Q4 FY26. Both companies are boosting operations, with QCIL enhancing talent and technology. Growth in Kerala and Bengaluru markets is vital amid rising competition. CLSA maintains an outperform rating on Ultratech with a target price of 13,500. Ultratech expects demand to recover in the second half, aided by government measures. GST cuts and coal cess removal will lower costs. The company aims to sustain cost savings and boost capacity in wires and cables. UBS initiates a sell rating on Supreme Industries with a target price of 3,500. The industry leader faces tough times ahead. Growth challenges surpass those of competitors. Overspending on capital expenditure, weak returns and unclear succession plans add pressure. UBS initiated a buy rating on Astral with a target price of 1,800 rupees. The company is set for strong performance in an industry upcycle. Astral's pipe segment will benefit from market tailwinds. Steady growth in other segments and smart capital spending will boost cash flow and returns. Sterling and Wilson Renewable Energy has secured a 1,415 crore letter of intent. It's from a private IPP developer. This marks their first private IPP order in FY26. The deal covers an EPC package for a 300 megawatt solar power plant in Rajasthan. The company's gross order inflow now exceeds 2,400 crore this year. MTAR Technologies has clinched a 386 crore order from Bloom Energy Corporation. These fall in the clean energy fuel cell segment. 205 crore will be executed by Q4 FY26. The remaining is set for Q1 FY27. The company's order book stands at 930.21 crore as of June 2025. MTAR shares soared nearly 5% today. HEG Limited's arm, Bhilwara Energy, has approved the allotment of 1.76 crore equity shares. These go to Singularity and its affiliates, and the price is 142.08 per share. This brings in 250 crore rupees of investment. Singularity AMC is backed by Madhusudhan Kela, and the deal gives them a 9.6% stake. It aids Bhilwara Green's energy push as HEG retains 44.3% control, and shares may rise further with an option for another 253 crore. Hindustan Aeronautics has signed a key pact with ISRO in space and NSIL. It covers technology transfer for the small satellite launch vehicle. HAL will absorb the tech over 2 years, and then the company enters a 10-year production phase. The SSLV can launch satellites up to 500 kg into low Earth orbit. This deal lets HAL mass produce for domestic and global markets. Sri Lotus Developers has won a key appointment. It will develop an ultra-luxury project in Bandra West, Mumbai. The site sits close to the famous Bandstand Promenade. This prime location boosts the project's appeal. Bandra West draws high-end buyers with its sea views and vibe. The deal marks a thumbs up for Sri Lotus. It strengthens their footprint in luxury real estate, and details on project size and timeline remain pending. Investors eye this as a growth signal for the firm. Mumbai's property market stays hot for premium spots. Voltam Transformers promoter Kunjal Patel sold a large portion of his shares, reducing his ownership to 30%. The deal fetched a significant amount. New investors including ABSL Insurance, Bajaj Allianz Life Insurance, Citigroup Global Markets Mauritius Prudential Assurance, and UTI Small Cap Fund picked up stakes. The sale doesn't shake Voltam's operations or market outlook, keeping things neutral. It is a reshuffle of ownership, with the promoter still holding a strong position. The Association of Mutual Funds in India, also known as AMFI, released data for August showing a 22% decline in net inflows into actively managed equity mutual funds at 33,430 crore versus 42,702 crore in July. Large cap funds saw improved inflows into 2,835 crore. However, mid and small cap funds recorded a significant drop in inflows to 3,193 crore and 4,993 crore respectively. Sectoral and thematic funds also saw a sharp fall in inflows to 3,893 crore, and new fund offers were subdued, raising 2,859 crore. The overall mutual funds industry's assets under management stood at 75.19 lakh crore. Non-life insurance premiums reached close to 25,000 crore in August, up 1.6% year-on-year. Bajaj Allianz led with over 2,000 crore, growing 19%. Go Digit followed with 738 crore, up 13%. New India Assurance and ICICI Lombard saw modest gains. Star Health and Niva Bhupa reported slower growth. HSBC reports a slowdown in insurance sector growth. Individual annualized premium equivalent sales dropped 10% month-on-month. Policyholders are delaying purchases, expecting GST rate cuts. Weak trends may persist in September 2025. Growth is expected to rebound from the third quarter of FY26. Life insurers' margins may face pressure after GST changes. Morgan Stanley notes that non-life insurance premiums grew 2% year-on-year in August, down from 6% year-to-date. Private multi-line insurers saw flat growth impacted by accounting changes for long-term policies. Standalone health insurers reported 4% growth, slower than July's 10%. Niva Bhupa's premium rose 3% year-on-year. Morgan Stanley also notes a broader slowdown since October 2024. The Delhi High Court ordered Priya Kapoor to disclose all assets of the late Sanjay Kapoor, and this follows a heated inheritance battle over a 10,000 crore estate. Rani Kapoor, his mother, alleges a suspicious 500 crore asset sale. Karishma Kapoor's children claim a forged will, seeking 1/5 each. Priya Kapoor says they got 1,900 crore. The next hearing is on October 9th. IDBI Bank has filed a new insolvency case against Zee Entertainment. It claims a 225.23 crore default. The debt ties to loans for City Networks, where Zee acts as a guarantor. Past pleas in 2023 and 2025 got dismissed due to COVID moratorium rules. Zee slams it as harassment and vowed to contest. The firm eyes defamation suit against IDBI. Novo Nordisk, the maker of obesity drug Wegovy, announced plans to cut around 9,000 jobs globally, about 11.5% of its workforce. Half of these cuts, roughly 5,000, will be in Denmark. The restructuring aims to save $1.25 billion annually by 2026 and accelerate decision-making amid rising competition, especially from US rival Eli Lilly. CEO Mike Dostar said the company must adapt to a more competitive obesity market by streamlining operations and reallocating resources to growth areas. Novo Nordisk also lowered its 2025 profit growth forecast due to these changes. The company faces slowing sales of Wegovy and Ozempic, especially in the US. Apple's launch event wrapped up with big reveals. The iPhone 17 series leads the pack. iPhone Air stands out as the thinnest iPhone yet. iPhone 17 Pro brings bold design and top performance. Apple Watch Series 11 offers smarter health tracking. AirPods Pro 3 adds live translation features. The event ended on a high note with UAE pricing details. Meta has been accused of covering up harms to children from its VR products. Whistleblowers Jason Satazan and Kate Savage say the company buried evidence of risks. Meta denies the allegations and insists research was not restricted. The hearing comes against the backdrop of ongoing concerns about youth safety on Meta platforms. The IMD has issued a heavy to very heavy rainfall warning for over 20 states and union territories as the monsoon intensifies. Red alerts are active for Himachal Pradesh, Uttarakhand, Chhattisgarh, Odisha, Gujarat and Madhya Pradesh, with extreme downpours risking flash floods and landslides. States like Punjab, Haryana, Rajasthan, Maharashtra and northeastern regions face thunderstorms and gusty winds through September the 11th. Curfew-like restrictions have been imposed and internet services have been suspended in Jammu and Kashmir's Doda district following massive protests and clashes over the arrest of Aam Aadmi Party MLA Mehraj Malik. All the board exams have been postponed across the state in the wake of these disturbances. A vote of confidence coming in from President Trump as he signals a thaw in the bilateral relations between India and the US. Trump hopes for a successful conclusion and calls PM Modi a very good friend. Reciprocating the same, the Prime Minister says our teams are working to conclude these discussions at the earliest. Nepal's army has enforced a nationwide curfew after 2 days of violent Gen Z protests. Protesters vandalized government buildings and attacked leaders. Soldiers now guard parliament in the deserted Kathmandu streets. The curfew lasts until 6 a.m. on September the 11th. It aims to curb ongoing criminal acts like looting and arson. Essential services like ambulances can operate. The army urges citizens to avoid misinformation and support peace efforts. India has placed its border with Nepal on high alert amid violent protests. The Sashastra Seema Bal and state police now guard the 1,751-kilometer frontier. Movement of citizens and goods stands restricted to prevent spillover. The Indian Army troops deploy at the embassy in Kathmandu, the hub of mob violence. Air travel halts as Nepal's airports shut down. India urges nationals to stay cautious and avoid non-essential trips. Nepal's PM KP Sharma Oli resigned under pressure, where at least 19 people have been left dead in clashes over social media ban and corruption. France's political chaos deepened as President Emmanuel Macron names close ally Sébastien Lecornu as the new prime minister just a day after Bayrou's government fell in a no-confidence vote over austerity measures. The 39-year-old former defense minister, a Macron loyalist since 2017, is tasked with forging consensus on the 26 budget amid a divided parliament. In a dramatic escalation, Israel launched a deadly airstrike on Hamas leaders in Qatar's capital Doha, killing 6 people, including a Qatari security officer and the son of top Hamas negotiator Khalil al-Hayya, amid ceasefire talks. The IDF called it a precise hit on those behind the October 7th attack, but Hamas claims its senior delegation survived, accusing Israel of sabotaging peace efforts. Qatar slammed the cowardly assault as a violation of sovereignty, with the UN, US, EU, Saudi Arabia, UAE and others echoing condemnation, warning it derails Gaza mediation. Poland shot down Russian drones that entered its airspace today, and this marks the first time a NATO member has fired during the Ukraine war. 19 objects crossed in during a massive Russian attack on Ukraine. Prime Minister Donald Tusk called it a large-scale provocation and activated NATO's Article 4 for consultations. Russia denied the claims, calling them groundless. European leaders see it as intentional escalation. Airports in Warsaw and Lublin closed briefly. Ukraine's Zelensky demanded a joint response from all partners. In a stunning upset in La Paz, Bolivia defeated Brazil by 1 goal to secure a crucial victory in CONMEBOL World Cup, qualifying and propelling them into the playoff round for the 26 tournament. Trailing in the standings, Bolivia's high-altitude home advantage proved decisive, with goals from key attackers sealing the win against a star-studded Brazilian side that dominated possession but faltered in thin air. This marks Bolivia's first appearance in the intercontinental playoffs, a massive boost for the underdogs who struggled in past campaigns. Brazil, now facing pressure to rebound, slips further in the table amid coaching scrutiny. Afghanistan kicked off the T20 Asia Cup 2025 with a bang, demolishing Hong Kong by 94 runs in Abu Dhabi. This marks their biggest ever victory by runs in the tournament's history. Batting first, they posted 188 for 6, powered by Sadiqullah Atal's unbeaten 73 off 52 balls. Hong Kong crumbled to a 94 for 9, with Gulbuddin Naib and Fazal Haq Faruqi grabbing 2 wickets each. This third biggest Asia Cup T20 win boosts Rashid Khan's side in Group B. And that's a wrap on Market Express. Stay tuned to NDTV Profit. We've got Profit 360 up next.
Thank you for joining us today. So let's just start very quickly with GST 2.0. Zorawar, your thoughts, keeping your sector in mind, hospitality and food?
So whenever there is, good evening all, great to be here amongst this august company. Whenever there is a tax cut or a GST reform, it's not just a cut in taxes, it's actually a growth and consumption accelerator. India is the only large economy in the world where 63% of our entire GDP is domestic consumption. So it's huge. More money in the pocket, reduction in complexity, it's fabulous. It's easy to file taxes, it's easier to pay for them. However, I think our industry, for some reason, does not get to experience the benefit of input tax credit. Now, we are the second largest employer of human capital in India after agriculture. 10 million people directly employed, another 10 million through ancillary means. We also contribute between 2 and 3% to the country's GDP. And we are now compounded annually growing at a rate about 11%. When the GST regime came about in, I think, June of 2017, the compounded annual growth rate was 22%. So it's come down to half for the organized sector and about 8% for the disorganized sector. That being said, I think we're very happy about some of the changes that have been incorporated now. So it's not all gloom and doom, it's very good. I think any reduction in complexity, any reduction in tax rates will put more money in the hands of the consumers, and that'll funnel its way down to us. The good thing is, and this is good trivia for you all, Indians love eating out more than any form of entertainment. The Indian F&B sector is 40 times larger than Bollywood, and Indians spend almost 40% of their gross disposable income on eating out. So we will probably be a direct beneficiary of added money in the hands of consumer. We'll also be a direct beneficiary in some of the input costs that we're going to face, no doubt about it. Ghee, bread, milk, meat, cheese, dairy products, parathas, as somebody mentioned before me, or ACs, utensils. So there'll be a fit-out cost benefit that we'll face. and they will obviously face a benefit in input costs, which happens to be our highest cost. But the problem is some of the key things that affect us are still not fully, the benefit is still not fully accruing to us because we don't get input tax credit. For example, and my dear friend Pushpa is sitting next to me, after food, the largest cost for the restaurant sector is occupancy cost. Occupancy cost is still charged at 18%, which means I'm technically paying a fifth higher in rent and I cannot get a credit. So in essence, when I measure per square foot rates, 500, 400, 300 rupees, it's actually not. 400 is actually 480 rupees.
So you're listening to that, huh?
Yes, no, she's my dear friend. So we have this banter on a lot of these forums, and we enjoy each other's company.
For the government.
Yes.
However, the lack of ITC for an industry like ours that is already plagued with razor-thin margins, and also, please understand, the morbidity rate of the food business, the restaurant sector, is the highest in the world. 9 out of 10 restaurants shut down within a month, and 9.6 out of 10 shut down within 18 months. So the margins are very thin. It's not a high profit sector. And it's also an industry. I really feel that we don't have the industry status yet, but we're big enough to be called an industry. And I think it's very important for us to kind of get the benefit of that. Like I said, any kind of enhancement in consumer spending will funnel its way to us, which will happen because people will now be paying less for some key instruments. However, the full benefit is still not fully accruing to us. And it's so we are the NRI, I represent the NRI, which is India's largest restaurant body. We have about 5 lakh members, and we have an incredibly robust set of driven people that are sending out these reps and warranties to the government, and we're very hopeful. I think now the time is right. There are other hotels and restaurants and hotels that get input tax credit. We don't get to enjoy that yet.
I'm going to come back to you. Let me give Pushpa a chance as well to come in here. Pushpa, I want to understand from you, Zorawar just spoke about, more money in the hands of consumers. From a retail perspective, do you expect shoppers to stay cautious and focus on essentials? Or is this a push towards aspirational lifestyles and purchases?
Good afternoon, everyone. Well, before I answer that question, you should grant me that I sit opposite Zorawar and negotiate with him on rents. That must be a tall order, right?
Yeah, that's what I was referring to back then, yes.
She's a tough negotiator, very tough.
Anyways, well, as far as the, the way I look at it is that I represent both CII as well as the shopping industry. And couple of things are very good and few dil mange more. One is, of course, the fact that, yes, there's a general sentiment where people are understanding that there's going to be more cash in their wallet. Discretionary income and spends would increase, and that is a natural fallout of this. The timing is really good from a shopping industry point of view because it's festive season. That's when 60% of our consumption happens during this belt of October to December, January. This is when 60% of our sales happen. So the timing is absolutely bang on. One of the things that I'd like to point out is that while the simplification is highly welcome across sectors. I've been talking to all of my retail tenants. They all say that the simplification and making it just 2-tier makes it super simple, and also the back-end calculations become that much more simple. However, the 2,500 for apparel currently is, and footwear, these are the 2 high consumption items in shopping industry, and that has been given an additional levy from 2,500. If you shop for 2,500 rupees, it is 12%. Anything above 2,500 rupees is 18%. Well, that, as Mr. Sanyal was sitting here, I wanted to walk up to him and say, why 2,500? What was that magic number about? Because I do think that any of us who go shopping, 2,500 for an apparel is going to make it value-centric, but not really aspirational. So one would want that 2,500 number to be relooked at, perhaps, and that would be a request from the shopping industry. However, the fact that there would be an overall sentiment boost, and also the fact that there will be more money in people's wallets, and that will definitely boost overall consumption.
But are you
in
seeing
malls.
that already in terms of footfalls in malls? Are you waiting for 22nd September to see that huge footfall in malls?
Well, again, I think like the earlier panels were talking about it, there is a lot of, at this point in time, I wouldn't call it confusion, but a certain query on how will the inventory, current inventory be tackled. They are waiting for that. But beyond that, and I'm sure there'll be clarity given by the government, the shopping period, which really starts from 22nd September, we do think that there will be some more value given, some more value-added discounts passed on, and hence we do expect much more in terms of our sales during the festive period overall.
All right, thank you so much to our panelists.
We see the problems, but you as a social entrepreneur see the solutions. You are not just creating solution, you are creating a future where everyone has a chance to thrive. For the change makers, the innovators, the ones building a better world, one solution at a time. The Adani Green Talk Social Impact Awards are created for you, inviting social entrepreneurs to apply. Green Talk Social Impact Awards 2025, where innovation meets impact.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily lives. We aren't talking about time travel yet.
Gadgets tested under extreme conditions.
But why? I review tech for people like you and me. You know what? Let me take it from here.
All right.
Tech isn't that complicated. In fact, it's about making our lives simpler, better, and more fun. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.